sidetrack once in a while. That's working. That's working. Cool beans. All right. Now we are up to 9 different channels. Broadcasting on 9 different channels. We're looking to include a couple of more. I want to get up to at least 14. I think that would be cool. Yeah, it's an ego thing. Terribly sorry. You only really need like 1 or 2. But nope, not me. I want to go to where the people are. Well, wherever the people are, that's where I want to go. Gasu. Hi. Was sent from Paul R. Brand new. Green to the industry. Go. Welcome, welcome. Let me know what you need. Ask any questions you like. I'm here until about 11 o'clock, and we'll see what we can do. Hold on a second. Somebody wanted to take a look at something. Where are we? Chad, what's going on, Chad? Okay, decoy deception. Can I give you a piece of random advice? Yeah, you ready for this one? Don't stick your head out too far. It might go home in another car. That's some good advice. Advice to live by. MRV. Okay, we're going to take a look at what Steve wants to take a look at. Dave, hold tight. We're going to sit tight with that one. Going to sit tight with this one. Dollar Generals, that's a good one. Sit tight, sit tight, sit tight, sit tight. Great. So I froze 3 of them because we got some good stocks to take a look at in all the different 3. Let me finish up with the introductions. Like I said, my name's James. This is Dividend Stock Talk. This is where me personally, okay, this is just a hobby for me. It's not a business. It's just a hobby. It's just what am I going to do in my golden years, okay? Everybody works for it. You work 30, 40 years of your life to get here, okay? To get here, get retirement. What are you going to do in your retirement? Well, I'm having fun teaching people what I know. Investing in dividend stocks for a simple, safe, predictable, consistent 1% per week. Now, if you don't know what 1% a week comes to at the end of the year, it's about 50%. Can you imagine doubling your money every 14 to 16 months compounded? Because 1% compounded every single week, you can double your money in 14 to 16 months. Imagine that. Now, at 5% per year, you got 20 years. Is that right? 20 years to double your money at 5% per year. Okay? I'm talking 16 months at 1% every single week. So, what does that mean? Well, it means, number one, I'm retired. It means I don't punch a clock anymore. Not that I don't work still, because I still work. I just don't get paid anymore. See, imagine that. You go to work, punch a time clock, 40, 50, 60 hours a week, and you get paid at the end of the week. Well, me, I still work, but I don't get paid anymore. Because of the work I do now, I go to my mother's house. I was at my mother's house today mowing the lawn, okay, until the batteries died. Yeah, I got an electric lawnmower. It is, don't get me wrong, I love it. You just press the button and it goes until it runs out of juice. See, now my house here, I can mow my lawn 4 times before the battery's dead. That's perfect. My mother's house? No, I can barely get through the whole lawn before the battery's dead. And then the weed whacker, same thing. One charge 4 times at my house, my mother's house. I ran out of the juice again on the way, and I didn't even get the whole walkway done. I got half of the, anyway, besides the point. So I'm still working, I'm just not getting paid. So you guys that are punching a time clock for someone else's dream, the reason why I say that is because, you ready for this? Profits are better than wages. So if you're trading your time for money, you are getting a wage. You're trading your time for money. Don't get me, there's nothing wrong with it. I did it for years. But profits, there's no limit on profits. There are limits on wages because you're working for someone else. But wages, yeah, no thank you. But anyway, let's continue. So as I was saying, simple, safe, predictable, consistent investing in dividend stocks. Not just any dividend stocks. I'm talking about pre-qualified dividend stocks. And what are those? Actually, what are they? Well, for me, they are companies that have consistently increased their profits year after year after year after year. Now, the ones that I like, Dividend Kings, 5 decades. Now, some of you aren't even 50 years old yet. So can you imagine a company that has been consistently profitable year after year after year after year after year? I can keep going for 50 years. 5 decades, 50 years, consistent increase in profits. Why the hell wouldn't you want to invest in those? Oh, blue chip stocks, they don't move a lot. Well, we don't need them to move a lot because there are literally dozens of trading strategies. You need to pick one that works. Well, I'm going to show you one tonight that works specifically, and I designed it specifically for my 9-year-old daughter. Imagine that, if you will. Okay, because we're all 9 years old at one point in time. What was your interest at 9 years old? Well, mine definitely wasn't stocks. I can guarantee you that. Okay, I wanted to go out and build tree forts, okay, bikes, and run down the street and go over big old jumps. Yeah, that crap you saw about the kids in the 70s. Yeah, that was me. I was your typical 70-year-old kid, 70s kid. Okay, yeah, we got hurt. We just rubbed a little bit of dirt on it, walked it off. Okay, we drank from the hose. Yep, you don't believe that? Yep, we actually really did. Okay, we weren't allowed in the house, because if you were in the house, that's a form of punishment. Go to your room. Now, go to your room, not the same as it is today. Because when they say go to your room, there's no TV, there's no radio. What's in there? Books, toys. No toys in the room either. Now, we had 6 kids in the house, 6, and we had one toy box for all 6 of us. The toy box is only like 2 feet by 2 feet by 2 feet. Imagine that, 6 kids, 1 toy box. Yeah, that's what it's like to be poor in those days. Anyway, besides the point. Simple, safe, predictable, consistent, 1% per week. We're actually going to go through it. I'm actually going to show you the stocks that I like, some of them. I'm going to show you how to do the trading strategy. It's simple. Okay, so in 2008, my 9-year-old daughter jumps on my lap, says, "Daddy, what are you doing?" Can you teach me? My 9-year-old daughter, I'm going to introduce you to her in a little bit. We're going to show you a video of her 15 years ago. Okay? Now, can you teach me from a 9-year-old little girl? Imagine that. Most adults don't know how to trade stocks. So what and how am I supposed to teach a 9-year-old? Well, I was working for a software company at the time. Cool software, really cool stuff. It was $5,000 for the software. But I had to create a strategy for a 9-year-old. It had to be simple, because she's only 9. Safe, because I didn't want her losing money. Predictable, because I wanted her to see that she's winning consistently. Simple, safe, predictable, consistent. I want her to be able to get profits consistently. And number 5, no way for her to lose. Well, because the strategy was based in a certain way, A plus B equals C. There's no way to lose unless you do something stupid. And that's what I told my daughter. There's no way for you to lose unless you do something stupid. Terribly sorry it was 2008. We didn't really have those safe spaces back then. Or did we? I don't know. There was no safe spaces in my house. So anyway, besides the point. 5 criteria, simple, safe, predictable, consistent, no way to lose, came with 5 rules. 5 rules, simple. Number 1, never buy something that's not on the list. Now, I'm going to explain the list a little bit, but for you, it's going to be the same thing. Pick a stock. Make sure it's a company that you like. Do your research on the company before you add it to your roster. Okay? Maybe you like IBM. Maybe you like AT&T. Maybe you like Apple. Great. Add it to your list. That's number 1. Never buy something that's not on your personal list. Number 2, never sell at a loss. It defeats the purpose of the whole game. And yes, it is a game. Kind of like Monopoly. 4 greenhouses, 1 red hotel, go around, collect $200, that type of scenario. Same thing. Stock market's the same. You can play with paper money, just like Monopoly, in the stock market. It's called a paper trading account or a virtual account, where you test your theories, you test your ideas to see, are you right or are you wrong? Now, I've been trading for over 30 years, and I still have a paper trading account. And yes, I still trade it every day because I want to make sure I don't do anything wrong. Funny thing is, I tell people most beginners are going to lose money. Ooh, excuse me. Interesting dinner. It's coming back up. How did it taste second time? Okay. Most people starting out lose most of their money or some of their money by hitting the wrong button. Okay, there's what? Over 100 different buttons on your keyboard? Take a look at your keyboard. Over a couple hundred buttons. hitting the wrong button, that's where you lose most of your money. The funny thing is, I did it 4 times this year. I think I did it 3 times this year. Anyway, one of those times I lost like $2,500 in front of a live audience. I'm in front of a live audience. I'm saying, right, let's do this, let's do this, let's do this. And I hit the button and said, oh, shit. And I just started laughing. $2,500 is nothing to laugh about when you lose it. But here's the thing. Think of it this way. I'm telling people, be careful not to hit the wrong button because you might lose money. And what did I do? I proved my point. Not that I didn't know. I did not do it on purpose. Seriously, do I look that stupid? No, don't answer that question. But think about it. I hit the wrong button and I didn't do it on purpose. And I just like, oh, shit. And then I started laughing. I said, do you see what I mean? Even a trained... I couldn't call myself a professional because to be a professional trader, you have to trade at least twice a day, all week. That means you got to do at least 10 trades a day in order to become a professional trader. Now, that's not my rule. That's the rule from the IRS. I'm pretty sure it's 2 times a day, at least twice a day to become a professional trader. But rule number 3, make sure the company is consistently profitable. Now, just to let you know, every single week, you can go back and look at some of my videos, every single week I check and see how many new stocks did they add. Well, last week there was 10,371. Well, now, this week there's 10,700. I think that's right. Yeah, a lot more. Every single week, they keep adding and adding and adding more stocks, more companies. Well, great. You need to pick out which ones you like and then only use those ones. Okay, so my pick. Wait a second. Let me get the last couple of rules out. So rule 3, make sure the company's consistently profitable. Rule 4, weekly options only. Now, the title of the show is Dividend Stock Talk. Well, we're talking about dividend stock. That kind of makes sense, right? The subtitle, Dividend Investing for Weekly Cash Flow. So to get weekly cash flow, you got 2 choices. 1, trade something that trades on a weekly basis. Weekly options. It's kind of like right in the title, weekly options. Or sit in front of your computer looking for little setups in here to buy, sell, in and out, that type of scenario. Yeah, I have no desire to sit in front of my computer. So if you think I'm sitting here on my computer all day long, you are so wrong. I get in at 9 o'clock in the morning because I have a group of people. It's a close-knit group, and we trade together. We look at what's coming up. What can we do to safely trade and to safely make a nice return on a weekly basis? Now, for those who don't know anything, it's good for them because you can see how other traders are doing it and you can ask questions. It's a great service until you're done with it. Because once you learn everything you need, you don't need to be there anymore. But most people stay anyway for the camaraderie and to follow what's going on. Because if you have the opportunity to look over someone's shoulder who's consistently profitable, why not? What does it mean to you? Okay, so rule 4, weekly options only. Rule 5, make sure all the numbers work. Now, we are going to get into that a little bit later, and we're actually going to go through some trades. You guys, I'm asking you to give me some stocks to take a look at. And I'm going to give you my opinion, all right? Was that JC or Jody? Someone just sent me something. That was nice. Thank you. Macy's there. There we go. Okay. We are going to go over a few trades. I'm actually going to walk through them so you can see how I do it. And then you can ask yourself, well, can I do this myself? Because there's only 5 questions you need to come away with. Number 1, this is my favorite. Question number 1. Does it make sense? It's a simple question. It either makes sense or it doesn't. Number 2, can I do this myself? That's a good question. Number 3 is, do I like this company? Whatever company we're looking at, do I like this company? Kirkster, thank you for that. Woohoo! Oh, it's gone. They should let it stay a little bit longer so everyone can enjoy that thing. Don't get old. It's no fun. You have a tendency to forget things. It's like I'm talking, and I have ADD. I do. Squirrel. I admit it. I know it. I know my shortcomings, and that's one of them. I get distracted really easily. So, where was I? I forget where I was. That's an interesting drink. Anyway, where was I? So we're going to go one step at a time, looking at different stocks like you guys are going to give me, and I'll take a look at them. Okay? I'm only asking a couple of favors. Number one, make sure it's a good company. Make sure it's at least 2 decades old. At least. Come on. See, now we're all here. Now, you may or may not know this. It's 9 different channels here. It's live streaming on 9 different channels. So you may be here asking a question and someone else over there asking a question. Okay, I can't answer all of them at the same time. So please ask the question only once. I'll try to get to every single one because I actually stopped the question so I can read them one at a time. Okay, that's number one. Number two, weekly options only. Because when you ask me about a stock that has no options at all, it's just wasting our time. And you may not know this, but anywhere between 10,000 and 30,000 people will come through these channels. So wasting other people's time, come on, that's not a good thing. And especially you guys on YouTube, grow up. Don't ask those stupid questions. And you know who you are asking me to ask. No, okay? I really do. If anybody wants to volunteer to be a moderator on YouTube, please. I get so many people on YouTube and I feel bad for it because there's only a couple people ask stupid, childish questions. Okay? So, make sure it's a good company, number one. One that you want to hold for the rest of your life. Never buy a stock you don't want to hold on to. That's rule number one. Okay? Rule 2, never sell a loss. Rule 3, make sure the company's profitable. Rule 4, weekly options only. And Rule 5, make sure all the numbers work. Now, just like a good movie, everything is going to come together before the night is over. I'm going to be here until 11. Right around 10:30, we're going to stop looking at stocks and we're going to answer questions because there's a lot going on. So, we got 4 companies, 4 companies. Take a look at Dollar General, Alcoa, Mera, and I'm pretty sure there's more down below, so let's keep on going. What is the best stock to start with? Jimmy Taylor, how are you today? That's a Blake Pison. How you doing, Blake? First time watching? Thank you, brother. Okay, so, as we were saying, let's start out with something easy. Mera is the first one on the list for the evening. If you don't know who, you know what? Let's look at TSLL. It's already up on the board. We bought some this morning because everything looked pretty damn good. So let's see what we got. First one I'm going to do is TSLL. Always, always, always ask yourself the question, do I like this company? Do I like this company at this current price? Am I willing to buy it, never ever sell it at a loss, and continue to get some type of income every single week? Think of it as a vending machine. I'm going to buy a vending machine. Great. The vending machine is going to give me a certain amount of money every single week. Once you buy it and you own it, it's yours to do with as you please. So here, as you can see, I wish I knew how to use this. But the only thing I know how to do on this board is this. That's it. I have no idea how to make it bigger, out smaller, but I do have someone coming in to teach me how to use this thing. Anyway, the nice thing I like about weekly optionable stock, look at this. 19 September, that's this Friday. 26 September, that's next Friday. 3 October, 3 Fridays away. 10 October, 4 Fridays away. 17 October, 5 Fridays away. So on and so forth. So if I buy, let's call it a little vending machine, a weekly cash producing asset. However you want to look at it. Now most people think of a cash producing asset like a limousine, vending machine, real estate. Okay, you buy a house and you rent it out. What do they call that? Bed and breakfast stuff, or that Airbnb? You buy a house and you just let people just stay there every once in a while. That's a cash producing asset. Well, there's a lot more involved in one of those than there is with this. Okay, you get a house on the lake. What is that, like $500,000? First of all, you have to have $500,000. And if you're renting it out on a monthly basis, yeah, great. You get the mortgage to pay, the interest, all that stuff. What is the profit you walk away with? We'll add that all up at the end of the year. You're putting in $500,000 because some people do pay cash, $500,000. Well, how much are you walking away with at the end of the year? Now, I talk to a lot of investors. They like to get a 7 to 8% cash on cash return. 7 to 8% per year. Well, I'm looking for 1% a week. That's over 50% per year. And what do I have to do? I just got to log in every morning. What did I buy it at? What did I sell? What's it at now? What direction is it going? It's easy. 5 or 10 minutes. Now, what I'm going to show you was created for a 9-year-old. Now, I do feel bad for those who have been failed by the current education system. If you can't understand what a 9-year-old could, because when I explained it to my 9-year-old daughter, it took her 15 minutes to understand it. Number one, pick out a good stock. Number two, is it in an upward trend? Is it an upward trend or downward trend? That's pretty easy to see. I mean, you don't need to know everything about all this just to be able to see, oh, look, it went up, it went down, now it's going sideways. You don't need to be a professional to figure that out. That is easy. Then you decide, is it a good company? Do I want to invest in it? Well, if I do, what am I buying it for? What am I buying it for? 1964. What's the closest strike price? The 20. Okay, what is the 20 selling for? Because if I buy it at 1964, I'm going to sell it at 20. Okay, and I'm going to collect it. Holy shit. $1.16? That's over 5%. I'm going to take a look at this one. But the numbers don't lie. Either you like the company or you don't. Is it the right time to buy it or is it not? I don't want to buy it at the high. That's the time to sell. I don't want to buy it at the low because you just don't know how low it's going to go. Because stocks do two things and only two things. They go up, they go down. They go up, they go down, they go up, down, up, down, up, down, up, down, up. That's all they do. They don't come to your house, take the dog for a walk. They don't wash the dishes. They don't empty the trash. They don't even tuck you in at night with a little pillow under your, the little candy under your pillow. They don't. They go up, they go down. That's it. Find the right time. You like a stock? Great. What's the right time to buy? Definitely not at the high. And do me a huge favor. When I say never buy something you don't understand, who's that? Coach! Thank you, Coach. When I say never buy something you don't understand, if you give me a stock that is at the high of the year, you're definitely going to get the, what the hell are you thinking? Seriously. Buying at the high of the year absolutely makes no sense to me. Would you buy at the high of the year? Why? Because you heard it over and over again. You buy low, you sell high. Buy low, sell high. Buy low, sell high. It's actually, never mind. Let's just go see what we're doing. All right. Enough of that blabbering. Let's jump in. Let's look at TSLL. First thing I'm looking for is 5 things. It takes 3 to 4 seconds. 3 to 4 seconds. That's it. You don't believe me? Let's go. Ready? High. Low. Where was it? Where is it? Up, down, sideways, up. That's it. That was 3 seconds. Set your clock. Let's do it again. You ready? Set your clock. High, low, was, is, direction. 3 seconds. You might not be able to do 3. You might have to do it 4. All right, maybe 5 seconds. Where's the high? Where's the low? Where was it? Where is it? What direction is it going? What's the flow of the river? What's the path through the woods? What's the motion of the ocean? Whatever you want to call it, up, down, up, down, up, down, up, down, whatever. It's simple and easy. Simple, safe, predictable, consistent, 1% per week. All right. Now, once I do this, I don't want to dive deeper into that yet. It's a quick 3 to 4 seconds. Yep, that works. That's it. Then I want to go over to here. What am I buying it for? Well, there's one number on the board. I call it the big number. You can call it whatever you want. Ready? Here we go. 1964, 1964, 1964, 1964. What do you think? Is there any other number on that board that's mentioned 4 times? Probably not. So, 1964 is the last traded price today. So when the market closed at 4 o'clock today, that's the price. So tomorrow, if I buy it at 1964, what am I going to sell it for? Well, I'm going to sell it for the closest strike price to my purchase price. I'm buying it at 1964, the closest strike price. See? strike price right here. I don't need to see all those. I'm just going to drop it down to like 8. There we go. Let's drop it to 6. I don't need to see all that. There we go. These are the strike prices. 1850, 19, 20, 21, 22, 23. So if I'm buying it at 1964, the closest one is the 20. So if I'm buying it at 1964, I sell it at 20. Okay, I get the difference between 1964 and 20, which is what, 36 cents? Not what I'm looking for. Oh, we'll get another one. Andrew, thank you. Okay, anyway, it's not a lot. It's not what I'm looking for. What I'm looking for is this right here. Okay? Now, if you don't know what a covered call is, there are literally hundreds of videos online available that will explain to you what a covered call is. Let me give you an example to see if you can grab it. Okay? Okay. First of all, let me tell you the technical explanation, and then I'm going to give you a practical explanation. Might be easier to grasp. Technical explanation. When you own a stock, okay, when you own a stock, so you got to buy the stock first. A covered call is when you sell somebody the right, not the obligation, to buy the stock from you at a predetermined price by a predetermined date. Okay, so in actuality, if you want to get technical, stock options are insurance policies. Okay, an insurance policy. You pay a premium for some sort of protection. You have a car, you have a car insurance. What is that? Coach, thank you. If you have a car, you have car insurance. If you have a house, you have homeowners insurance. If you have, health, you have health insurance. So on and so forth. Now, for a contract, a insurance policy contract to be valid, you need 4 things. Beginning date, ending date, consideration, that's money. It could be a piece of pie, it could be a handshake, it could be a pen, it could be anything. Consideration, something of value. And number 4, it's called, technical terms, it's called meeting of the minds. That means it's just an agreement. I agree something, you agree something, we have a handshake, we say yes, we say no, you pay me, and then we have a contract. Beginning date, ending date, consideration, money, and meeting of the minds or an agreement. So that's the actual technical word for a covered call. Let me give you a practical one, might be easier. Let's say, hypothetically speaking, you get an old car in your backyard. You take the car in the backyard, you push it out onto the front lawn, and you slap a for sale sign on it. Say you want $10,000 for it. Let's say it's a 1968 Camaro convertible. Needs a little bit of work, but still worth 10 grand. Anyway, Tom down the street, he comes by and says, hey, I like your car. Let me give you $100. Hold it for me until Friday. I come back on Friday, I'll give you the whole $10,000. Keep the $100 as a non-refundable IOU that I promise to come back and get it. If I don't, you have the right to sell it to someone else on the following Monday. But you get to keep that $100. So Friday comes, Tom shows up, he gives you the $10,000. So you walk away with $10,100. If he doesn't show up, you keep that $100 and then you sell it on Monday. Peter, 2 towns over. He says, hey, I like your car. Let me give you $100. Hold it for me till Friday. So if Peter shows up on Friday, he's either going to give you the $10,000 for the car. So now you get 100 from one, you get 100 from the other, and you get the 10,000. That's 1% per week. Now what happens if he doesn't do it? Well, you can keep doing that every single week, and every single week you can get a non-refundable cash deposit. Hold it for me. I'll be back on Friday. That's all it is. A non-refundable cash deposit. If you show up, it doesn't get deducted from the price. I'm just holding it for you until Friday. You show up on Friday, you pay me full price. You don't show up on Friday, you don't get your money back. I keep it and I sell it to someone else. That is a stock option. Same thing, but here I'm buying Tesla, TSLL. I buy 100 shares, that's 1 contract. 500 shares, 5 contracts. Well, I'm going to show you and walk through it, and you see if it makes sense to you. All right, First one on the list. 5 things. High, low, was, is. Where's it going? Fine. We already did the numbers. Well over 1%. Let's keep on moving. Next, I want to look at deeper into the chart to find out, is it the right time to buy? All right, so need the glasses for this one. A year ago, TSLL is at 1117. She shoots up for the high of the year in the middle of December, 41.89. From there, she drops to the bottom of the year in the first week of April. What is that? Is that right? Hold on. Back up. Does that say 41.82? 41.82 is the high. The bottom down here, hold on. Wait a second. Am I reading that right? 620? It goes from 42 to 620. What is that, like an 85, 90% drop? So here's the thing. Okay, and you got to think deep about this one. If you buy a stock at 42, it drops down to $6. Are you going to panic and sell? It's a good question. A lot of people do that. Now, if the company's consistently profitable and they increase their dividends every year, I won't sell. Okay? That's me. You have to figure out. Because some people call that an acceptable loss. Or, take my money, live to fight another day. Well, most people buy a stock and they hold it for years and decades and they collect a dividend every 90 days. And they don't really care about the price. They keep buying and selling, buying and selling. So if I buy every quarter, so I buy here, I buy here, I buy here, I buy here, and it averages out at the end of the year. That's what most people do. Me? No. I want to buy, sell a covered call, collect the premium, then I want to get out. Because it goes up, down, up, down, up, down. So when it goes up, I want to sell. Down, I'll buy. Up, I'll sell. Down, I'll buy. And I'll keep doing that all the time. Now, I have over 300 stocks that I like to look at. Now, we're going to look at those in a little bit. But let's keep going over this one. I keep getting sidetracked, don't I? Sorry. I told you I have ADD. All right, so anyway, here's the bottom here. That's a big 85, 90% drop. Then from here, she shoots up. Now we're at 1964. Okay. What does the last 30 days look like? Now this, for me, is a definite no. Only because here's your 30-day bottom. Here's your 30-day top today. So it goes from 11 to 20. 11 to 20. What is that, a 95% increase in 1 month? From $11 to $20? So no, I'm not going to do this one. Unless, hold on, don't jump the gun, unless I want to take a look at the bigger picture. And here's the bigger picture right here. Okay, the high of the year way up here. Okay, the bottom of the year way down here. We're here. So it is going up. But from here to here, 90%, yeah, there can be profit taken. That's going to come back down again. Then I'll jump in. But let's go to another one. Okay, no to TSLL this week. Now, the one we had here, first one, what was the first one? Run for the hills. I'm feeling like a 70-year-old kid. Fly guy, what's going on? All right. Macy's. Dave wants to take a look at Macy's. He was the first one on the list to chime in. Here we go. I'm going to say no. The reason I'm saying, don't get me wrong, Macy's was my #1 stock last year and the year before. I made a bunch of money off of Macy's. Jump in, jump out, jump in, jump out, jump in, jump out. Okay, it's at the high of the 90-day period right now. I'm going to wait for it to, see, here's the bottom, shoots up, then she's going to drop, then I'll jump in. It's got a gap here. They usually comes down, then I'll jump in. So I like Macy's. I'm going to put Macy's down for 2 weeks from today, because I'm going to give it at least 2 weeks for it to come back down again. MSTE. What the heck is that? Wait a second. I missed some. Leanne NC Dub. What's going on? What's going on? Colin, UNH. UNH. I'm going to say no to UNH only for a couple of reasons. Number one, it's a high way up here. Bottom's here. She goes up. Now she's pulling back down again. Let's zoom in a little closer. See, it shouldn't take you long to decide. Don't get me wrong. I like UNH. I do. But here's bottom here. Shoots up. Here's the top. Now she's coming back down. She went from 300 to 360. 300 to 360. Right here. See? 300. Right here. 300. 360. See? 360 right there. So from 300, that's a $60 increase. That's 20%. $60 increase. 20%. It jumps up 20%. Yeah. Profit taken right there. As soon as it's done, finds a new bottom, I'll turn around and go back up again. Then I will look at it. So I'm going to put UNH for next week. We'll look at UNH again next week. So, next, Lemonade, how are you doing? Gerant, how are you? Colin, JMF, TJR, what's going on? Mr. Guacamole, do you invest in CEFs? George, I have no idea what a CEF is. George, I'm a little on the older side. I have no idea how old you are. I'm in my 60s, so I invest in what works for me. Okay? Now, I might look at it. Coles. Cool beans. James, let's take a look at Coles. James wants to take a look at Coles. Oh, James, why the hell did you do that? Do you like that, James? Why the hell did you take one look at it? Okay, high, low. Where was it? Where is it? Look at this. Down, up, down, up. This right here, James, kind of makes me wonder. Hold on, let's take a closer look at it. Okay, glasses. Even it's like it's a 60-inch TV. It's huge, and it's like 4 feet away. And I still need glasses. Getting old ain't any fun. It ain't. Okay. Last 30 days. Bottom's at 12. She jumps up to 18. Okay, I see your point. She jumps up. Here's the high. Drops down. Here's the bottom. 1, 2, 3. Right there. That makes sense. It does. If you like Kohl's. Now, Kohl's last year was, again, one of my top producing stocks because I looked at it every single day. And I looked at opportunities. Up, down, up, down, up, down, up. See, I only trade 5 days at a time. Ooh, what's that? I missed it, damn it. 5 days at a time. So I buy on a Monday. I like to be up by Friday. Sometimes I'll push it into the next week if the market maker offers me more. See, here's a cool thing when you buy a stock. See, a lot of you don't know this, but how you look at things when it comes to investing, especially in the stock market, think of it this way. If I buy at 1724, right, and I get a 1% for this week, great. Come Thursday or Friday, I'm taking a look at it. Should I sell it, take that profit and walk away? Or do I ask the market maker? Because the market maker is the only one you can buy and sell to. You cannot buy to me. I cannot sell to you. You have to buy and sell to the market maker. That's it. See, when you go to your local corner store, 7-Eleven, Quick Stop, Quickie Mart, the Circle K, Quick Stop, whatever it is, whatever the corner store is, okay, you want to buy candy? Great. You want to buy soda? Great. You want to buy milk? Great. You're buying it from the person who owns that store. You cannot go to the manufacturer and say, hey, I want to buy one candy bar. It doesn't work that way. You have to buy from the store owner. Now, he buys from someone else, so he does the buying and selling. So the market maker, he's a very important person in this whole equation. So here's the thing. If I buy here, get my 1%, and the stock's starting to go like this, I have two opportunities. Number one, let it go, get all my money back along with the profit, because that's what I'm looking for. Or I can ask the market maker, if I hold this for one more week, what are you going to give me? So let's say the market maker say, hey, hold on to your stock. Let me give you another 1 or 2%. I'm all for that. So if I buy coal 1724, I sell it to 1750. I collect this right here. Friday comes along and I think to myself, what is the market maker offering me to hold this for one more week? It's like, I'm going to play some pool. Here, hold my beer. You know, you've been there before, like playing a game of darts. Here, hold my beer. Let me do this. Oh, I can take a phone call. Here, hold this. Same thing, but here it's money. Okay? Don't sell your stock. Hold on to it for another week. I'm going to give you this. That's called rolling forward. So now, you may not understand that, what that means. If I buy a stock, sell some on the right, that's a covered call. At the end of the week, the expiration, that option expires on Friday at 3:59 p.m. because at 4 o'clock, market closes, you can't do anything. But you could, on Friday morning or Thursday afternoon, ask the market maker. You're not really asking him, you're just looking what he has posted. Okay, if he posts, more than 1 or 2% for me to hold it for another week, it's like, here, no, you hold on to it for another week, I'll pay you this much money, just hold so you don't sell it. So when I say rule 5, make sure all the numbers work. So if I'm buying it here, 17.24, selling it at 17.50, I'm collecting 66 cents. Okay, this is a yes. That's a fucking definite yes. So we're actually going to do this one and progress forward. So let's do one now on calls, and then you tell me or tell yourself, number 1, does it make sense? Number 2, do you think you can do it? Number 3, do I like this stock at this current price? And number 4, am I willing to hold on to it, never, ever, ever sell it for less than what I paid for it, 17.24, unless it hits my target. My target, 17.50. And if it does hit 17.50, let me ask the market maker, if I hold it for another week, what are you offering me? Are you offering me another 1 or 2%? No? Fine. Let it go. Give me my money. I'll find something else. Because don't get me wrong. This thing shoots up. I'll take my profits. I'll sell it. And then I'll wait for it to come back down again. What do I mean by that? Take a look at this. Okay. Back to February. Up, down. 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 I'm only looking for 5 days. That's it. I want to jump in on Monday, out on Friday. That's what I'm looking for. Look at how many times I can do it. Number 1, never buy something you don't want to own. Number 2, never sell at a loss. Number 3, make sure the company's profitable. Number 4, weekly options only. Number 5, make sure the numbers work. I'm buying at 17.24, selling it at 17.50. Market maker's giving me 66 cents. Doesn't sound like a lot, does it? The stock is 17.24. 66 cents on a $17 stock is over 3%. 3% for 1 week. That's over 150% per year. I'm terribly sorry if you have to put some time and effort into this. Okay? Guess what? If you don't brush your teeth every single day, eventually you're going to pay a whole shitload of money to get dentures, falsies, implants, or whatever. You don't take care of your hair every single day, guess what? It's going to fall out. You don't take care of your body every once in a while, you're going to fall apart when you get in your 60s and 70s. Do something, don't do something, it's your choice. But remember this, we're the only species on this planet that's got to live here. To pay to live here, sorry. The only species got to pay to live here. So how you decide you want to live when you get to your golden age, your golden, what are the golden years? It's directly related on you. How well you take care of yourself, that's directly related on you. How much money you have when you retire, that's directly related on you. Okay, don't get me wrong. 55, 60, 65 is coming whether you like it or not, whether you agree with it or not. Tomorrow I'm flying to Chicago. We have a class reunion. 5 decades, 50-year class reunion. Do I look that old? Do I really? If you say yes, I don't want to talk to you. 5 decades, 50 years ago, graduation. Okay? It's coming whether you like it or not. Retirement is coming whether you like it or not. And when it comes time to retire, you get 2 choices. Number 1, invest your own money. Learn to do it yourself. Take responsibility. Take accountability for your money. Or 2, you take it. I don't want to deal with it. Give me whatever you think. But think long and hard before you do that. Because when you give your money to somebody else, they're not going to give you 1% a week. Granted, you don't have to do anything. You're just collecting the money. And if you have enough money, you don't have to worry about it. Hey, great. Because right now, the average is 4 to 5%, draw per year. Okay? 4 to 5%. So if you got $1 million, 4% draw is $40,000 a year. Can you live on $40,000 a year? Well, no. Then you're going to need $2 million. 4% draw is $80,000 a year. Can you live on $80,000 a year? No? Well, now you're going to need $3 million. So it's $120,000 a year and a 4% draw. Or learn to do it yourself. Okay? Learn to do it yourself 1% a week, $100,000 will give you 50 grand a year. If you do it right. If you don't panic. If you pay attention. It's simple, safe, predictable, consistent. It was created for a 9-year-old. Let me introduce you to the little princess. Alrighty. Here's the website. Oh, if you didn't know, you can book a call with me if you want. That's new. Here's what I want to show you right here. Weekly Trades 2024. That brings me up to all my social media sites. Right there, YouTube. Let's go to YouTube so I can introduce you to the princess. She hates that, by the way. Don't call me a princess. I'm not a princess. I said, sorry, kiddo. You're my princess, and you always will be. All right, the oldest video's right there. And here she is.
Hi, and as you being part of my company, which my dad doesn't let me calling it that, but I do. Being part of that, you're going to be getting.
Oh, I was in the way. Sorry.
Of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you with the
Okay.
money.
Now, here's me.
List number 1.
Over 20 days.
There's me. 15 years ago. Look at all that hair I had. Holy cow.
What does that mean? That means every single day you're going to buy a different stock. Every single day there's a different company paying out dividends.
That's my favorite part. Believe it or not, it's my favorite part. I laugh every time I see that. Because a 9-year-old, she was actually 11 in that video. Because at 9, they didn't have what they had when she was 11. Okay? So at 9, it was just me and her. And then as time progressed, well, we got a little deeper in it. What you see behind me is a dividend calendar, which they didn't have back then. So I had to put it on a big-ass whiteboard and had to do it all by hand. Well, nowadays, it's at a click of a mouse. Let me show you. Click of a mouse. Where is it? Where is it? Right. Whoops. Here you go, right there. EX Dividend Calendar, September 2025. We are in the 17th, right here. It is approximately 9:46 p.m. on the 17th of September. So somebody's going to be here saying, is this live or is this recorded? Well, tomorrow it will be a recording. Today it's being recorded. Okay, so that's the difference. So yes, the screen behind me is being live streamed on YouTube and it is being recorded. Okay, so if you want, you can go back to the 10-Minute Trader on YouTube and you can watch this whole thing over again. Funny thing is, there's 1,200 videos and they all basically look the exact same, except for what we're talking about today. We didn't talk about it yesterday. We're not going to talk about it tomorrow because as you can see, okay, this is an EX Dividend Calendar. Each one of these little green dots represents a company that is paying a dividend. Remember I told you there's over 10,700 different companies in the stock market. Well, half of them pay a dividend, the other half do not. So you have capital appreciation. That means you put your money into a company and the stock goes up. That's capital appreciation. Okay? In my younger days, that was great. This point in my life, I want cash flow because my bills come due every single week. Every week I'm getting a bill for something. So I want my money to work for me every single week. And here's another thing. At 1% per week, that's 50% per year. And yeah, it's going to cost me 10 or 15 minutes of my time. Boo-hoo. I'll tell you this, okay? Out of everything I've done in my past, okay, I've done a lot. I was a lobsterman, I was a fisherman, I was a lumberjack, I was, picture me as a lumberjack. Farmer, manufacturer. I own my own manufacturing company. Believe it or not, can you imagine me as a CEO? Hey, you got to do this. Hey, you got to. Yeah, that was me, CEO. Okay, I had 26 employees at one point in time. It was kind of exciting. Okay, I'd done a lot of things in my life, but I never got paid over $1,000 an hour, ever, until now. Because see, I take my little nest egg. I work 15 minutes a day, okay, on my own personal account. 15 minutes a day, which is less than 10 or 15 minutes. At the end of the week, it's about an hour. About an hour of my time to make 1%. So a $100,000 account, that's $1,000 for 1 hour every single week. And what am I doing? I'm looking at what did I buy? What did I sell against it? What did I collect? Where's it at now? Where's it going? What does that mean? What do I do? Now, you may think those are difficult, but they're not. Think of driving a car. You're driving a car. You're listening to the motor because you need to know, is the motor going over revving or not? Does it sound right? Is there something wrong with it? You have to pay attention to the rear view, the side view mirrors. You know, what's on this side, what's on that side, what's in the rear view mirror behind you, what's ahead of you, which way is the road going, is there a traffic light, are there people on the side of the road getting ready to come in, is there a car coming on the one side, car coming on the other side, is there a truck coming this way, and how much gas do you have, what's the temperature gauge at? There's a lot going on just in a car. Okay, great. A lot less going on in the stock market. What did I buy it for? What did I sell? Where's it at now? Where's it going? What does it mean? What do I do? It's not that difficult. Anyway, so dividend calendar. Now, the reason why I use a dividend calendar, because stocks have a tendency to do the same things over and over and over again, especially dividend stocks, especially the blue chip stocks. And I don't like blue chip stocks. They hardly ever move. It's not what we're looking for. What I'm looking for is the insurance premium on a covered call. It's simple, it's safe, it's predictable, it's consistent. So, 4 dates when you're investing in dividend stocks. 4 dates, you remember? Here we go. Date number 1, the announcement date. That's when the company actually tells you, hey, this is how much money we made, this is how you're going to get yours. Number 2 is the EX dividend date. That's represented by these little green dots. That is the last day, or where is it? EX dividend date. The last day the stock trades before the dividend is paid out. So if you want to collect the dividend, you got to buy it before the date. You like Campbell's soup right here, the 2nd of October. You want Campbell's soup dividend? You got to buy it before this date. The 1st, the 24th, the 16th, the 19th, the 11th, the 5th, any day before this date if you want to collect the dividend. That's what a dividend calendar is for. Date number 3, date of record. It sounds normal. If you own the stock on the date of record. See, years ago, they used to take a book and they used to write down who owns this stock. Oh, there it is. But then they take the book and they hand it off to the accounting department. And the accounting department would write a check to each person that owned the stock on the date of record. So if your name's not in the book on the date of record, you don't get anything. It's that simple. Okay, you go to a business. We're open 9 to 5. You show up at 5:05. They're closed. Too bad. So sad. It's the reason you have to have certain rules. Okay, you want it. You need to buy it before this date. You buy it after the date, you don't get it. Plain and simple. Date number 4. Payment date, when you actually get your money. 4 dates. Announcement date, EX dividend date, date of record, payment date. Okay, so let's go back to the trade where we were. Okay, so we're looking at Kohl's. All right, current price, $17.24. All right, so let's do a trade on this one, because this one actually looks good and all the numbers look good, and you probably want to see in action what a covered call entails. Okay, so $17.24 is the price. The closest strike price is the $17.50, and it's going for 66 cents a share. So first thing I want to do is I want to change this from single to covered stock. If you're curious, these are all the different trading strategies. Okay, I'm only showing you one. I'm a nice guy, but I got to draw the line somewhere. Now, I could show you all of them. Ain't going to happen. Don't even bother asking. Okay, I'm doing this for free. I'm not asking you for anything, and I can guarantee you 100% I'm not going to try to sell you anything. I'm not going to say, oh, wait a second, have I got a great deal for you? If you order now, get 2 for the price of 1. Order now, yay! No, I'm not going to do that. I'm just going to show you how to do it. You want to do it? Fine, go ahead. We're all adults. We know how it works. I've written 14 books. You want to buy one? Fine. Website, go find it yourself. I'm terribly sorry. You know what I mean? All right. So I'm going to change it to covered stock right there. I'm going to buy the stock. I'm going to sell the stock at the exact same time. Well, within a couple of seconds. But that's kind of like what it is. There we go, covered stock. Remember, 1750? Here it is right there. Okay, I love Think or Swim. It pops up everything I need. So I click on this right here, 1750. I want to buy it right there, and this pops up. Okay, great. How many shares I want to buy? I'm not going to do 1,000 because some of you might not think 1,000 is a lot. So let's just do one contract. That way you get an idea what one is. And you think to yourself, ooh, I have enough money. I can get 7. Oh, I have enough money. I can get 113. We all have a different amount of money. We all have a different set of risk parameters. So let's see what the numbers look like. One contract at the market price, because I want it to fill instantaneously. You can do a limit order or a market order. You get two choices. Market order, it fills instantaneously. I sell, I buy all at the exact same time. Limit order, it's going to sit on the market maker's desk until he decides, okay, yeah, I'll fill that. I don't ever, when I'm buying, when I'm entering, I never do limit order because you never know how long it's going to sit on the market maker's computer because he's not obligated to do that. Now, why do I do market order instead of limit order? Because with a covered call, you're doing 2 trades at once. I'm buying the stock, selling the option all at the same time. Now, remember at the beginning where I said simple? Okay, it's a very easy trade. I said safe. It is so safe you can actually do this in your government-sponsored IRA. Some trades you cannot do in your IRA, but this one you can. Simple, safe, predictable. Remember that? Predictable. What is that? Yay! Thank you. I can't read that name. Predictable. Remember that? Simple, safe, predictable. I know what I'm going to make right here, maximum profit, before I even do this. See, most people buy the stock and then they wait for the stock to move. Well, you have fun with that. I'm going to do this and I don't care if the stock moves at all. Oh, I got someone to call. Okay, thank you for that, whoever signed up for a call. Anyway, simple, safe, predictable. Okay, so I know what I'm going to make right here. This is what's going to cost me. So before I even do this trade, I want to do a little bit of math to see, is this a good trade or not? Because I know exactly what my profit's going to be, and the stock doesn't even have to move at all. Let me explain. All right, first, let's see what the profit is on this one. Calculator, come out, wherever you are. Where the hell did you go? There we go. Calculator. All right. To find out your rate of return, you take the profit, 101.50. You divide that by your investment. What is the investment? Cost of the trade, including commissions and fees. Okay, $1,649. Think of it as buying a gumball machine, a candy machine, a vending machine, soda machine. Okay, the soda machine is going to cost me $1,600. What am I making this week? Well, this week I'm making 101. Next week I might make 115. I might make 98. I might make 85. It's a different number every single week. The question you need to ask yourself is that okay for me? Am I okay with that? Now, you only have to dish this out once. You can collect this or close to that every single week until you decide to sell. I don't ever have to sell if I don't want to. And if I collect this every single week, see, it's $100 bucks. How many weeks do I have to go to break even? $1,600 at $100 bucks, I have to go 16 weeks. 16 weeks is 4 months. Break even is 4 months. Then everything over that is 100% profit. It's not the way I'm looking at it though. But anyway, I'm looking at a weekly cash producing asset. That's it. You can label it however you want. Buying stocks, you're gambling, whatever. However you want to go on in your mind to come to terms of what we're doing. We're investing. Good company, consistently profitable, weekly options. I want weekly cash flow. Okay, so take the profit, 101.50. 101.50 and divided by the investment. Cost of the trade, including commissions and fees, $1,649, and that is 1649 equals the grand total. Oh, shit, 6%. Sorry, 6% for 1 week. So here's the question. Does it make sense? Can I do it myself? Am I okay with 1724 on Kohl's? Am I willing to hold it and get a weekly cash flow from it every single week, or until it hits my target? My target, 1750. It's at 1724, and it's in an upward trend. It's bouncing off the bottom, going upwards. It either makes sense or it doesn't make sense. Either I like it or I don't like it. Next! I'm going to write this one down. Hold on a second. Kohl's at 8%. You got to be kidding me. Ooh, FedEx was 8% yesterday. Oh, no, this is 6%. Sorry. All right. Next. Now, let's see if we can go through these a little bit faster, because I'm sure you guys want to look at more than just two. All right. What do we have next? Alrighty. Crunktoid, run for the hills. I'm not quite sure what that means, run for the hills. I mean, I know what it means, but in this context, it makes no sense. A wise bean, how are you doing today? All right, what else do we have over here? Eric wants to take a look at Dollar General, DG. Let's take a look. DG, Dollar General, tra-la-la. Ooh, look at that. Did you see what I just saw? 3 to 4 seconds. Ready? High, low. Where was it? Where is it? Down, up, down, up, down, up. Okay? The high's here. She dropped here. Now she's going back up again. That's for the 1 year. That's a 1 year chart. It looks good. What do the numbers look like? 106. The 106 is to go for 189. I'm going to say hell yeah. Roll. Chart looks good. Numbers look good. Let's get a little deeper into the chart. Let's see how quick we can do this. A year ago, 86. Middle of January is the bottom at 66.43. Look at the last 90 days. The last 90 days. The high. Oh, holy cow. The low. Look at that. Big gap up. High, low. Where was it? Where is it? Look at this. Up, down, up, down, up. Okay, the high's right here. Coming down. Here's the bottom. Now she's turning around. Stocks go up until they're done. Stocks come down until they're done. And then they reverse directions. See? Up, down, up, down, up, down. That's all they do. Just follow along. Follow the bouncing ball. Follow the bouncing ball. Bouncy, chancy, chancy, chancy. Fun, 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 fun. The wonderful thing about Tiggers is I'm the only one. Okay, so last 30 days. I like looking at the last 30 days because it gives me an idea of where it's going next. Think about it. Where is it going next? Okay, high, low. Where was it? Where is it? Where's it going? Up, down, up. Now, the bottom was yesterday. So today is only 1 day to the upside. For me personally, I like 2 days to the upside, and on the third day, I will jump in. If you're one who likes to gamble and try to find bottoms, here's your shot right there. Okay, buy low, sell high. Now, I like Dollar General. I really, really do. But I like 2 days to the upside. On the third day, I'll jump in. Bottoms here, 1 day. I'm going to wait. That's me. You want to do it, that's your thing. Okay, does it make sense at 106? Well, let's find out. Set that at 1. Here's Johnny by 1. Covered call DG, 26 September. That's next Friday. 106 call option. That's the sales price. At the market to open, 191, 10,000. Let's find out what that rate of return is. Calculator. Hello, hello, hello. Oh, what is this? Get that one out of there. This one right there. There we go. Get rid of that. Profit, 191. Investment, 10,409. 10,409. Grand total of 1.8. Well, that's over 1%. It's close to 2%. Why the hell not? 1% a week is 50% per year. 1.8% Well, that's close to 100% a year. Let's go 98%, 99%. I'm okay with that. But you got to ask that question. Do I like Dollar General at this current price? Next. I'm going to write that down. Dollar General 1.8. DG 1.8. Let's keep on keeping on. Okay, so, yeah. Okay, let's look at Merck first. And then after we're done with Merck, remind me Wells Fargo, all right? Okay, thanks. Merck, M-R-K. Let's do it. What does Merck look like? M-R-K. Here we go. Oh, check that out. The high and the low. Where was it? Where is it? Down, up, down. What's going on here? Hey, let's find out. But before we find out, 81, 55 to 82, 172. Oh, yeah, hell yeah. The numbers look good. Well, let's take out the chart. Step 1, chart. Great. Step 2, numbers. Great. Step 3, deep dive into the chart. Let's go deep dive. Here we go. The high of the year was a year ago, 119. Went from 119 down to 73, and that was middle of May. Okay, last 90 days. High, low, where was it? Where is it? Up, down. What's going on here? Same thing we just looked at. Same thing. Okay, 30-day high, 30-day bottom was yesterday. Today is the first day to the upside for Merck, if you like Merck. So let's take a look at the numbers. 81, let's get out of here. 81. One contract, la 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 la. There we go. At the market, la la. And here's Johnny by one Merck. One covered call. Gotta remember that. Always remember to say what you mean and mean what you say, because by saying it wrong, if you ever have to call in an order, that means call your broker and say, hey, this is what it is. I want to buy one covered call, MRK 100, that's the weeklies. 26 September 25, that means it expires next Friday. The $81 call option against the stock at the market to open. Okay, right here. That's the order right there. Maximum profit 151, the investment 7,900. Let's take a look at the calculator. 151 divided by cost of the trade, including commissions and fees, 79.49. Grand total of 1.89. Same thing. Do I like this company? Does it make sense? Am I willing to do it? Never, ever, ever sell for less than I paid for it. It's all valid questions. Urban, hey man, I won't be able to say or anymore because I just got IG. It was fun, thank you. Thank you, Urban. I'm not quite sure what that means, but hey, whatever. I'm going to write that one down too, because I actually have some Merck. I think. MRK. Was that 1.9? 1.9. 1.9. Yes, I write stuff down. I don't trust computers. I'm on a computer, but I don't trust them. That's why I write stuff down. Many a times have I hit the wrong button and everything disappeared. I remember doing this one. I was writing a really good story. It was a really, I've written 14 books, so I'm writing this one. Okay? I turned away, turned back, hit the button by accident, and everything disappeared. Yeah, I try not to do that anymore. Wells Fargo, right? Wells Fargo. Uh-oh. Help me out in this one. Wells Fargo. Come on. What is it? Ticker symbol? He disappeared on me. WSF? No, that ain't it.
Sorry, James. Is it WFC?
WFC. Damn it. Yeah, WFC. Sorry. Ooh. I don't know. Look what's going on here. But let's take a look at the whole thing, okay? Here's the high, here's the low, here's where it was, here's where it is, up, down, okay. 82.48, the 83, 115, the numbers look okay. Well, let's look a close look at the chart. I'm kind of curious of the last 30 days on this thing. All right, a year ago was the bottom of the year at 53. Okay, the high, look at the last 90 days. High, low, where was it, where is it? Look at this, down, up, down, up, down, up. Top, bottom, shooting up. That might be an okay one. Let's go a little deeper the last 30 days. Now, don't get me wrong, I like Wells Fargo. They've been around for over 100 years. Okay? I don't think they're a dividend king. They might be a dividend aristocrat, which means 25 years of increased profits. But look at the last 30 days. Your high, your low, where was it, where is it? Up, down, up. Okay, down, up, down. Okay, maybe, if you like Wells Fargo. So let's see what the 83s look like. Okay, let's get rid of this. 83, right there. One contract, come on, right there. Market order, there it goes. Here's Johnny by one covered call, Wells Fargo, 26 September, the 83 call at the market to open, blah, 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 blah. Here's my profit, 154. The investment is 8,000. Let's see what that looks like. Now, I may have gone through that a little fast for some of you, but it is being recorded on YouTube. So if you want to go back and watch it over again, each and every single one of these platforms you're on, there's 9 different platforms that we're streaming on, live on 9. Each one has a bio. Each one will have a link to the websites. They're all interlinked. I like to think that. Might not be true, but I like to think that. Because technology is not my number one thing. I leave that to my sons to take care of. Okay? So, that being said, let's take a look at these numbers. And does Wells Fargo tickle my fancy? That's an interesting way of putting it, right? Does it tickle my fancy? So, 154.50 is the profit. Okay, right here. Max profit, 154.50. I love a covered call because it tells me what am I going to make before I risk anything. Now, most people buy the stock and wait for the stock to go up before they sell. Well, I know what my profit's going to be, and the stock doesn't have to move at all. It can stay exactly where it is because these stocks go 3 different ways. Up, down, and nowhere. Just flat. Nowhere. Up, down, or nowhere. So, if it goes up, I make money. If it stays the same, I make money. If it goes down, well, I got to hold it a little bit longer. But remember rule 1, never buy something you don't want to hold on to. Well, if I don't like Wells Fargo and I'm not willing to take it to my grave, I'm not going to buy it. Well, just to let you know, I do like Wells Fargo, and I do buy it often. But I'm not a buy and hold kind of guy. Buy and hold doesn't work for me because buy and hold has no cash flow until I sell. Well, if I do a weekly option, I'm selling something every single week. In one, whatever you have, you get 20,000, 1% is $200 a week. You get 50,000, 1% is $500 a week. You have 100,000, 1% a week is $1,000 a week. Whatever you got, wherever you're starting. I started out with $12,000. Oh my God, back in the 90s. That tells you how long I've been doing this. So you have an idea. And if you think I'm getting 50% for all those years, no. Because I live off of my interest. So what I make, I use to pay my bills. So my account does not get 50% every year because I use that money to live off of. So it doesn't keep compounding. So if I make $1,000 a week and my bills are $900 a week, guess what? I'm only adding $100 a week to my account. Sorry, it is what it is. But I like getting 1% every week because it takes care of all my bills. All right. 154 is the profit divided by the investment, 81.46. Divide 81.46 comes a grand total of 1. That's not right. Let me try that again. Let's try that again. 154.50 divided by 8,146. 1.89. Okay, a little bit less than 2%. Does it make sense? Do I like this company? Let's keep on keeping on. What do we have next? All right, I'm going to sit down for a little bit, answer some of these questions, because I don't want you... You're welcome. That's what we're here for, brother. We're here to see what's going on. Where should I spend my money today? All right. IG is Instagram. Okay, I'm actually on Instagram. Not today, though, because some strange reason, you have to have 1,000 followers on Instagram in order to broadcast live on Instagram. I don't have 1,000 followers on Instagram. Maybe, some of you guys can help me out. Go to the website, to the social media, go to Instagram, and subscribe. That way I can broadcast on Instagram. All right, anyway, where are we? Dun, 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 dun. Adam, Robinhood has not been around for 20 years yet, and I don't think they have dividends. Uh-oh, Strong Mike, Texas. Paul Rod, yeah, but also more than 2 trades is less than 5 days. Okay. Strong Mike, Texas. TQQQQQQQ. I don't know why people like the Qs. I mean, let's take a look. All right, so we're going to go to Yahoo Finance. Now, if you're investing seriously, you need to have at your fingertips a financial website. I like Yahoo Finance. Okay, I've never even tried Google Finance because I got on this one and said, oh, this is cool. Come on. All right, what was it? TQQQT. QQQ. Here we go. All right, give it a couple of seconds while it loads. I'm going to take a look at a few more questions. So, Strong Mike in Texas likes TQQQ. I have no idea why. It's like, do you do your research, Mike? We're going to find out, okay? You can hide behind the screen all you want, but I'm going to find out, and I'm going to call you out. All right, so first thing I want to do... Now I'm disappointed in you, Mike. I really am. Because numbers don't lie. They don't. So did you actually take a look at the financials? Now, what I mean the financials is how much per share are they earning? What is the dividend per share? What is the income? What is the book value? What is the rate of return? Well, my friend, TQQQ, $99 per share, has a yield of 1.03% for the year. 1% for the year. Mike, do you understand what 1% a week is? 1% a week is 50% per year. TQQQ, 1.03. All right, hold up. We're going to take a look at historical data right here. Okay, historical data. Come on, wherever you go. There you go. Okay, so historical data is going to tell me what are the dividends. How consistently profitable is TQQQ. Okay, Pro Shares, Ultra Pro, QQQ. All right. See where it says historical prices and the date? Well, I want to look at the dividends only. Now, if you don't know what the data stream is, this is the data stream, okay? The date, September 17th, 16th, 15th, blah, blah, blah. The opening price of the day, high price of the day, low price of the day, the close, the adjusted, and the volume. That's all the numbers you need to know. Okay, the open, the high, the low, the close, the volume. Okay, and the date, Okay, so I want to look at the dividends only the dividends, because the dividends will tell me if the company's consistently profitable. And I will look at all the dividends, all 20 years of dividends, all 20 years, because if I'm going to invest my money into it, I want to make sure it's a good quality company and those in charge know what they're doing. And if you know what you're doing, you're making more money this year than you did last year. Next year, you're going to make more money next year than you did this year. That is consistency of profitability. So let's take a look at all the numbers. What, are you shitting me? Something's missing. 14, 15, 18. 14, 15, 18. Aren't they missing a few years there? And hold on a second. Isn't 20 years ago 2005? Why are we at 2014? This is not 20 years old. Okay. First dividend, 0.0005, 0.0007, 0.0004, 0.01, 0.0. What the hell is this? Did you even read those numbers, dude? Seriously. Hold on. Okay, let's get the whole numbers. Because this 0.00005, what the hell is that? Says that 1/1,000,000th of a penny? Oh, sorry, 5/1,000,000ths of a penny. 0.0005. Yeah, no thank you. Anyway, whole numbers. 2023, that was like 2 years ago. What the hell's the matter with you? Okay, 9 cents. 15, all right, that's higher. 12, wait a second, that's going backwards. 13, 22, 21, that's going backwards. 28, 23, that's going backwards. 27, 19, what the heck? No, nope. Okay, from now on, Mike, I don't want to listen to anything you have to say. Dude, come on, seriously. Did you even read how profitable this damn thing is? 1% a year, and it's not consistently profitable, and it's only had whole numbers for the past 3 years? Yeah, no thank you. Sorry, Mike, no. That's a no. All right, CH Renos, MST. What the hell is that? It's like, why can't you guys do your own research? MSTE. All right, do you remember when I said dividends only? There's no dividends in this. This is a freaking hell no, waste of time. Thank you very much. Scott, Apple. I love Apple. I do. Oh, no, Mike, I'm ignoring you, Mike. I can tell SPXL. That's a hell no, and I don't even have to look at it. Because I've been doing this long enough to know that SPXL is not consistently profitable either. So, Scott wants to take a look at Apple. I like Apple. Apple wasn't on my list. Apple was on Warren Buffett's list. All right. Very simple. High, low, where was it? Where is it? Up, down, up, down, up. Okay, that's interesting right there. Before we go any further, 238.99. 240's going for $3. That's over 1%. That makes me a happy camper. Makes sense. Well, let's look at the chart. Is it the right time to buy Apple? I want to show you something on Apple that you might say, ooh, I like this. Well, let's find out. All right. A year ago, 215. High of the year was right at the end of last year, 260. That was the end of December. We bottomed out on TDS Day. TDS Day. All right. Second week of April. Shoots up nicely. Okay, well, let's go zoom in a little bit closer. Last 3 months, last 90 days, same thing. High, low. Okay, it's in an upward trend at the moment. Last 30 days, where's it going next? It's not guaranteed, but guess what? There's only 3 guarantees in life. That's it. All right, here's the last 30 days. High, low, where was it? Where is it? Look, it's down, up, down, up. Okay, from here, 226 to 242. Was that 16? No, wait a minute. 28, 38, about $16. So from here to here is about $16. $16 on a $224 stock. It's not quite 10%, just a little bit under 10%. So this thing might go up more because from here to here is not 10%. It's only like 8% or 7.5%, 7.5, 8. So there is a possibility for it to go up. But let me show you something I haven't shown in a while. So let's take a look at this. This is what is called, let's move this over so you get a good feel for it. This is called a seasonality chart. What is it showing me? It's showing me one full year. All the way over here is January 1st. All the way over here is December 31st. The blue line represents the movement this year. This is what the stock has done this year, that blue line. The red line is 10 years average movement. This is the average movement. Look, January, February, she goes up. Oops. She goes up, she goes down. She goes up, she goes down. She goes up, she goes down, she goes up. So where are we right now? We're right here. So let's zoom into that and see what we can expect Apple to do for the next couple of weeks. Well, here we are right here. Right there. Okay? This little blue dot, that's today. Okay? Here we are. That's going to go down, and then it's going to go back up again. So I'm going to hold off on Apple only because, number one, okay, not much more can go because here's the 30-day high here. Right now, it's challenging that 30-day high. Can it go higher? Yeah, it can. Is that a game you want to play? Well, there's 10,700 other companies that might be a better fit. Because you should have gotten this a couple of days ago when it hit this, and then it went up. Or a couple of weeks ago when it was here, and then it went up. I like Apple. I should be watching it all the time. So as much as I like Apple, I'm going to pass on it for this week. That's me. But for you, if you like it, let's take a look. 238, we're going to look at the 240s. 240s right there. That's the closest one. One contract. Da-da-da-da-da-da. Whoops, 1111 right there. Market order. Here we go. Here's Johnny. Buy one covered call of Apple. 26 September. That's next Friday. The 240 call option. 330 is the profit. 23 is the investment. Let's see. Calculator, come on down. Let's see what you got. Let's see what you got, brother. All right. 330 is the profit. Okay. Maximum profit. 330. Let's see what it looks like. Divided by cost of investment, including fees, 23,670. Grand total of 1.39. Well, look at else what we saw tonight. We saw 8%. Wait a minute, that was yesterday, FedEx. We saw Starbucks 1.9, Kohl's 6%, Dollar General 1.8, Mark 1.9. Well, this one is 1.3. Let's call it 1.4. Still over 1%. And it's Apple. They usually always come up with a new nifty product in the fourth quarter. Well, guess what? Fourth quarter's only a couple of weeks away. Kind of makes sense. Hoax. Intel. Let's get my seat so I can get comfy because we're almost at 10:30. Ooh, my goodness. Hoax wants to take a look at Intel. All right. Intel. INTC. Interesting. Interesting. Take a look. The high, the low. Look at the movement. Look at your last 90 days. Okay, there's your last 90 days. Your last 30 days, this baby's just going sideways for a while. Look at that. The high, the low, just going sideways between 24 and 25. Okay, just sideways. If you like Intel, do the numbers work? 24.90. The 25s are going for 65. That's more than 2.5%. If you like Intel. Okay? Punch in all the numbers. See what they look like. Yes, Scott. Apple has weekly options. Pete Smith. Mickey D's. Ooh, Mickey D's. MCD. Ooh, what's going on there? Okay, the high, the low. Where was it? Where's it? Look at the motion. Blah, 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 blah. Last 30 days. Ooh, take a look at that. High, low, look at this, down, up, down, 1, 2. Perfect opportunity for tomorrow's 305s. NJ! Woohoo! Oops, I dropped my pen. Dropped my pen. Look at the 305s for tomorrow. I mean, for next week. Yeah, no. Tomorrow. Seriously, take a look. Here's the high. Here's the bottom. Now she's turning around going up. Bottom, 1, 2. That's 2 days to the upside. If she opens up at 305 tomorrow, for me, this is for me, would be a perfect opportunity. Now, I don't have any money at the moment because all my money is invested in Monday and Tuesday. Well, today's Wednesday. All my money's tied up until Friday. And on Friday, I take a look. What do I do? What did I buy? What did I sell? What's it at now? What should I do next? I do that on Friday. Then on Monday, I will buy some more stuff. And then all my money's tied up on Monday and Tuesday, Wednesday. So I've been doing this long enough. It's kind of like routine. Okay? I do all my trades Monday and Tuesday. I pay all my bills on Wednesday because I get all my money on Mondays and Tuesdays. And then Friday, I decide, do I want to push it forward another week? Do I want to sell it out? Do I want to bring in some more cash? It's repetitive and boring. So you want to have a conversation, okay, go to the website, book a call. I'll give you a buzz. We'll chat. I can guarantee you and promise you I will not try to sell you anything. We'll just have a conversation because this is not for everyone. Okay, tell me what you like. Tell me what you're looking for. Tell me where you are. Tell me where you want to go. And I'll say, yeah, hey, you know what? This is not for everyone. Jumati, is that right? Thank you, Jumati. All right. So anyway, let's take a look at Mickey D's at 305. 305, Mickey D. One contract. Market order. Off to the races. Here we go. One covered call, Mickey D, September 26th. Mickey D's to open, 363, 30,000. Really? 30,000? 363? Oh, let's find out. Okay, profit, 363 divided by cost of investment, including commissions and fees, 31.37. That's $30,137 per contract. That's less than McDonald's. Because, what is that? Natalie! Yay, Natalie! What is that? Oh, that's nice of you, Natalie. Thank you. 1.2%. Okay, now to buy a Mickey D's, what is it, 5-6 million a year? And then you'd be lucky if you get a 5% return if you buy a McDonald's. Well, that's what the numbers are. Okay, go check out what the franchise fee is for McDonald's. Then find out what is the average return on a McDonald's. It's usually around 3 to 5%. If you got a couple $1 million to buy a McDonald's. All right, I'm going to go jump over to the website over here. Oh, yeah, to the website over here to see what they have to say. Bodelio wants to take a look at Target. All right, wait a second. Did I miss over here? Oh, I did. I missed a whole bunch over here. Holy cow. Uh-oh. Sorry, you guys. What do we have? King, Hugo, Jessica, Colin, Demetrio, what's happening? Albert, Charlie, Gasu, UB Golfer, Eddie, Be Like Lonnie, cool. Smabrut, okay. Ace Dyer, George Ari, Isel, K-Bert, Bert, Texas Shack, Solomon, Dogstar, Big Daddy Ken. Hi, was sent by Paul. Cool. Green to the industry. Gasu, just chill out, relax, ask whatever questions you like. Viper, Eric. Non-nurse, Freya. Eric, DG 1% in 2 daes. Should open up higher on the third day. Okay, Eric. Caleb, is $44,000 in a Roth IRA good for a 20-year-old? Well, it depends on what you're going to do with it, of course. Okay, you put it into some of this crap that gets you 1% a year, I'm going to say no, but that's just me. I know absolutely nothing about you. Okay? So if you take control of your own account, and there's some things you can do in a Roth IRA and some things you cannot do in a Roth IRA. Okay, JTM, hope you're enjoying deep dish pizza. No, I actually had lasagna tonight. Adam, I used to be a grandma in my past life. Thank you for sharing. I'm going to sleep better. Oscar, Visa, MasterCard, constantly increasing. You're absolutely right. They are. Visa and MasterCard are both on my list. And so isn't Lowe's. Dr. Dev, how are you doing today? You were talking about the second rule. Can I do it? Yep. Can you? I mean, if you're a doctor, dude, you should be able to grasp it like this. Okay? 9-year-old. If it's on the list and it looks good, yes. That's it for my 9-year-old daughter. Never buy something on the list that's not on the list. Make sure the company's consistently profitable. Never sell at a loss. Weekly options only, and make sure the numbers work. Mike Sweeney, Seth, good evening. Davo, what stock is that? That is Mickey D's, McDonald's. Garza, we looked at TSLL. Thank you, Mike Sweeney, thank you. Landonsi, okay. Brad, can you explain how stock options can predict implied move on a stock after earnings are released? Yes and no. Yes, I can explain to you, but no, I'm not going to, because it's going to take up way too much time, and it's supposed to be a simple strategy. What you're asking is a more complex strategy, more effort. Okay, so the more time and effort you put in, yeah, you'll get higher rates of return, but higher rates of return are coming with higher risks. Which stock is he reviewing now? Jose, that is McDonald's. I would not think that Tesla meet the parameters fund not in dividend stock. You're absolutely right, Jose. Okay. Socrates, cool beans. Edenher, okay. Farham, okay, whatever. Can't read that. User 6882K, thanks, you're welcome. Brentwood, how much money do you spend per trade? Well, I have 7 different accounts, so each account is different depending on how much is in the account. But I like to keep it at 20%. So if I have 100 grand, it's 20, 20, 20, 20. If I got $1 million, it's 200, 200, 200. Okay, so it's all relative to what you have. For me. Brad, FedEx, cool beans. Brentwood. That's seriously your rundown because it went up. Now it's going to go down. I'm going to agree with you, Brentwood, because stocks go up and then they go down. And then they go up and then they go down. Just how far is going to be the question. What if it keeps going up? Okay, Brentwood, I've never, ever, ever seen a stock that kept going up where there wasn't some kind of a pullback or some kind of profit taken. You name me one stock that went up and never came back down again. Okay, they go up, they pull back. They go up, they pull back. They go up, because there's always someone jumping out and taking their profits. Mastercraft HVAC, you're listening. I'm listening. Don't you have more gamma risk with selling the weeklies rather than the monthlies? Poor man's covered call. Ooh, I like the poor man's covered call. I don't do them anymore because the rate of return as opposed to the time and effort into them, I just don't do it. I prefer the 1% a week. I do. It's simpler, it's easier, it's less time, less effort. And you're right, but here's the thing. I did not explain to my 9-year-old daughter about the gamma risk. I did not explain to her about the delta. I did not explain to her about the Fibonacci. I did not explain to her about the RSI, the MACD. I didn't explain to her anything. I told her, follow the bouncing ball. Up, down, up, down, up. It's going up, great. That's a yes. Okay, if it's going down, that's a no. For a 9-year-old, it's simple. Adults make it more complicated than it needs to be. Lockheed Martin, Lunco, she show, okay. K-View and HRL. All right, let's take a look at K-View and HRL for she show. She show. All right, anyway. K-View, K-View. K-V-U-E, K-View. Interesting. Interesting. Before I go any deeper into it, I want you to take a look at this right here, the last 30 days. This thing's going sideways. Doesn't make any sense. I mean, look. She goes up, she comes down, and then she's just going sideways. The 1834s, the 1850s are going for 43, which is over 2%. If you like K-View. Same thing, if you like K-View. HRL, Hormel, ooh, Dividend King, which means they've been around for over 100 years, and they've been profitable for more than 5 decades. Look at this big drop right here. You had a big drop right here, finds the bottom. Now she's going back up again. Let's zoom in a little bit closer. Get a little closer. Now don't be shy. Get a little. Okay, this thing's just going sideways. So I'm not quite sure where you stand on this one. Because you top there, because this is going to fill eventually. Let me get up. Let me get up. All right. Here's your high. Here's your low. She went up. Big gap down. Now she's just going sideways. 24.89, the 25, 0. Yeah, no, thank you. Yes.
Any thoughts on MOS?
Mosaic, M-O-S. I said a M-O-S, a T-E-R, a G with a double E. All right, here we go. M-O-S, the high, the low. Where was it? Where is it? Look at this. Sideways, down, up, down, up. 34.16, the 34 is going for 77. That's over 2%. Well, let's take a look. Let's make a deal. Here we go. All right. A year ago, 25.63. We bottomed out. Second week of April, TDS day, 22.36. From 22.36, she jumps up to 38. 22 to 38. That's 16 bucks. $16 on a $22 stock? Was that 70%? 75? Okay, 90 days. High, low, was, is, look at this. Down, up, down, up. Okay, that's easy to see. Get your high here at 37. Now we're at 34 and keep going up. But she went from 32 to 34. That's only $2. $2 on a $30 stock. Well, that's only like 7%. Anyway, last 30 days. I don't know. What do you think? Oops, nope. Here, up, down, up. 32 to 34. That's $2.40. $2.40 on a $32 stock. It's what, 7%? Okay, so from here to here. So it could keep going up. It could, if you like it. So 34.50, all right, the 34.50 is going 54, okay, let's find out. 34.50, there it is. One contract, tra-la-la. Oh, right there. Market, here we go. And here's Johnny. Johnny Tony's one by one covered call Mosaic, 26 September, that's next Friday. Mosaic at the market, the 34.50 call option. $89 is the profit. $3,300 is the investment. Weekly cash producing asset. Does it make sense? It either makes sense or it doesn't. Okay, weekly cash producing asset. How much money do you have to buy however many weekly cash producing assets you like? Well, I like Mosaic. But is it the right time? Do the numbers work? Well, let's find out. The profit's 89. Max profit, 89. Cost of trade, including commissions and fees, 33. Let's find out. Calculator, come out, wherever you are. Here we go. Clear this. $89 the profit divided by the investment, 33. 61. 2.6. So here's the question. 2.6% for 1 week. Well, we know that's over 100% per year. It's probably like 120, 130, something like that. Do I like Mosaic? Am I willing to buy it and hold on to it until it hits my target? Well, right now it's at 34.16. I'm selling it at 34.50, and I will never, ever, ever sell it for less than what I paid for it, because to me that makes no sense. Mosaic has increased its dividends for a very long time, and they are over, I believe they're over 100 years old. I believe. Don't quote me on that one. Anyway, next, let's go to the next one. We got 17 minutes left, and we have a whole bunch of questions to go over. So let's see how many questions we can get. I'm not going to look at some more stocks unless they're really, really good. So hit me with your best shot. You ready? AJ, thank you for that. Michael Kirby, how are you today? RF Holdings, Brian. Rich Words World. Okay. Aldi Ramsey. Cool. How you doing today? Marlena. Good evening. Alex. Hameka. Good evening. Levi. What's going on? Victoria. What's that song? Victoria. Okay, I didn't think of it. Anyway. Bubba Joe. What's going on, Bubba Joe? Don't be ridiculous. What an interesting name. What were your parents thinking when they named you that? Mimiko. Willie, what's going on, Willie? Hateman. Oh. Good evening, fan. I'm not saying that. What stock symbol is that? MOS. That's Mosaic. Fatima, good evening. WCMCSN. I don't even know how to pronounce that one. Chia, how you doing? Let's keep on going. Michael, good evening, Michael. Nanny, good evening. Chia, thank you for giving wisdom. You're welcome. FLW, NDL, Gamer, good evening. Patton 262, what's going on? Free Rider. Simi, how are you today? Hati, Tigger. The only Moni. All right, Sonique, good evening. Hydro Shop, what's going on? Josh, what's going on? Thank you. All right, Hoax, we already did Intel. Mr. Cowboy, I want to be a cowboy. Ooh, I like that song. Oh, I like both renditions because I want to be a cow. Who sings that? I forget who does that. I like John Bon Jovi's Cowboy too. What company is this? We're looking at Mosaic. What's the most you made? That's an inappropriate question. I tried in the past and failed miserably, but I wasn't able to absorb it when trying to learn. Okay. You know what? You're relatively new here because I'm really good at names, and I don't remember seeing that name before. So just keep on coming back. Keep asking questions. The main questions you need to ask is, does it make sense? Number one. Number two, can I do it? Do I have the discipline? That's a good question. And then you have to think to yourself, do I like this company? You know, and does it make sense? Do I like this company? And can I do it every single day? Dr. Dev, ExxonMobil. Hey, Mary June. I haven't seen you in about a month. How you doing, Mary June? Because yes, Mary June and I we have talked before, right? You sent me your phone number. I gave you a buzz. ExxonMobil, Dr. Dev, XOM. Come on down. You're the next contestant on The Price is Right. Uh-oh, wrong one. I want to look at right there. Okay. ExxonMobil. Ooh, check that out. Okay, you get your top over there, your bottom. Look where we are right now, this area right here. Okay, she went up, she went down, now she's going back up again. Look, your top's way up there. Okay, that doesn't look that bad. The 115s, I got to go over to this side now. The 115s are going for 166. So yeah, all the numbers work. If you want to take a better look at it tomorrow, we'll take a look at it tomorrow. ADM. Archer Daniel Midland. Ooh, Dividend King. Nice pick, Mary June. All right. What company is this? ExxonMobil. Marcus. Mr. Sullivan. How are you doing today? Heather Bailey. Good evening, good evening. Because Bill Bailey was my buddy in high school, right? We joined the service together. He had a sister. He had twin sisters. One was Heather. I think the other one was Sarah Bailey. Anyway, he passed a long time ago. It's like, that's not fair, you know? He's the same age as me. We went to school together. He's been gone over 10 years. Anyway, Midwest, how you doing? Overlord Alvarez, how you doing? No Fret Brett in Connecticut. No Fret Brett in Connecticut. Way to go, No Fret Brett. How you doing today? Back 1861. Okay, hoax. Who was that? I have no idea what that means. We're done. No questions there. No questions there. Oh, wait a second. Got questions over here. What do we have over here? Ooh, DVN. So T-Mac wants to take a look at Devon Energy. DVN. Tra-la-la. Okay, here we go. DVN. High, low. Where was it? Where is it? Look at this. Down, up, down, up. 35.41 to 35.50, 70. That's over 2%. Let's take a gander. High of the year, 43.33. The low of the year, 25. That's a big drop, 43 to 25. Okay, so look at the last 90 days. Okay, high, low, where was it? Where is it? Nice moving to where we are now, last 30 days. That looks nice, doesn't it? High, low, where was it? Where is it? Look at this. Up, down, up. 1 day, 2 day. Tomorrow will be day number 3. So if tomorrow is up, you know, higher than today's close, which is 35.41. So if it's at 30, once it hits 35.42, that's my jumping in point. Because I like 2 days. 2 days to the upside. On the third day, I will jump in. Okay. That being said, 35.50, 70 cents. We got 10 minutes left. Don't really have time to look at this one because we still have a whole bunch more questions. 73 and 20. I got over 100 questions to look at. Sorry. But I do like Devon Energy. Look at it. It looks cool. Brianna. How are you doing, Miss Brianna? Hilda Hulinda. Good evening. Jeffrey Bond. How you doing? Jesslyn. How are you? Let's keep on keeping on. Hung Daisy. Crod. 1134. How you doing? K-Van. Did we do Alcoa yet? AA. Nice. Look at that. The high, the low. Look at the movement from here. Whoops. Here to here. It's hitting the high. Now it's coming back down again. Take a look at the movement from here to there. All right. Okay. There's your bottom. Shoots up. Now you get profit taking. 2 days in a row, she's coming back down. All this increase. Now it's coming back down again. Don't get me wrong. I love Alcoa. I do. Okay, it looks like 2 weeks from now it might be a better shot. What stock was that? That was Alcoa. AA. Delia? Delia, how are you today? Hoax? Mark? We already looked at Mark. Delia? Nope. Oh, who's this? Abry. What's happening, Abry? I don't know you, so sorry. WFC, that's Wells Fargo. Thank you there, Mr. Bruner. Apothic 4. Return. I left you a message. Awesome. You left me a message. I will contact you. Ooh, before I forget. Okay? Now, I think the highest form of flattery is copying. There's over 30 people pretending to be me. If you get a text, if you get an Instagram message, if you get a WhatsApp or any kind of communication whatsoever, any kind, and you think you're talking to me, no. Sorry, it's not me. I do not do that. If you want to talk to me, drop me your number, I'll give you a call, or go to the website and register for a call. Okay, I promise you, I'm not going to try to sell you anything. Okay, I have enough money. It's not what I'm looking for. I'm looking to share my information. I'm looking to share my knowledge. I think, this is just me, I think it's a sin to take everything I learned with me to the next adventure. So I'm trying to leave it behind for my children and my grandchildren. You guys just so happen to be here. Okay, so I'm creating a video diary for my children and grandchildren, and you are here to take advantage of that situation. I don't blame you. I'd do it too. Some bonehead online making money showing you how to do it for free. All you're doing is you're investing some of your time, seeing something you probably never even thought of. And then you have to ask yourself questions. Does it make sense? Can I do this myself? Well, you can practice all you want with paper trade. It's kind of like Monopoly. It doesn't cost you anything but your time. You don't have any time? Fine. Does it make sense? Buy a good company. Sell somebody the rights to buy it from you for the exact same price you just paid for it. It either makes sense or it doesn't. All right, let's keep on going. Return, thank you, you left me a message. So as I was saying, okay, if you think you are talking to me through a text, through some kind of Discord or something like that, it's most likely not me. Okay, if you want to chat, I have no problem whatsoever. I love talking to people. It gives me a chance to shut my mouth and actually listen, because I have no one to talk to here. I'm just blurting stuff out. No one talking. So you know what we're going to do in the near future? We're actually going to have a phone line, so you can actually call in and ask questions. If you're up for that, there's always someone up for that. At the money or little bit above your cost basis. Knowledgeable investor, back again. How are you today? I remember the first time you came here, you were negative, but now you're getting a little bit on the positive side. Good for you. Club Med Tom. Got bad news on Nucor. Okay, glad I didn't buy it. Combo Crusader. PYXI. I have no idea what that means. Truly Tyrone, how are you doing? Ken, how are you doing? Dela, it's too high up in the price. Thank you, Dela. James, you are trying to capture a 1% premium on a covered call each week. Is that correct? Okay, knowledgeable investor, it was correct the first time you asked me that like 2 or 3 months ago. Nothing has changed in the last 2 or 3 months. Okay? So yeah, you're on a new TikTok channel this time. You're on the other TikTok channel last time we've had conversations. Okay, so I'm good with names. So if you're going to try to stump me, you're going to have to come up with a different name. And then don't ask me the exact same question you asked me 3 or 4 months ago. Can you check PYXIS? I have no idea who they are. PYXIS. Okay, PYXIS. When it says we cannot find that symbol, that means one of two things. One, it doesn't exist, or two, it's not a U.S. stock. That's all that means. Katim, what's going on? Bugsy Malone. No way. That's a cool name, dude. Bugsy Malone. Yo, don't worry about it. Got Bugsy on the case. How you doing, Bugsy Malone? Katim, what's going on? Sejay. Shalon Ambrosi. Okay. Loreto, how you doing? Dahlia, 1.89%, not bad. Evelium Empire, hold on. How much did you say you could make a week off of 100,000? Okay, looks like I got his attention. 100,000, 1% a week is $1,000 a week. That's 1% per week. That's my goal. And yeah, I've hit my goal. Ooh, see, I haven't shown this in a while. Who is this one? Evelium Empire. Okay, I haven't shown this in a while. $20.25. The trades for 2025. They're all posted online. Here we go. Oh, cow. I haven't done this in a while. Alrighty. Okay, so who are we chatting with? Evelium. Evelium. That's an interesting name. I never heard that one before, but okay. Okay, Evelium, you ready? Week 1, December 30th to January 3rd. That's the first week of this year. Account number 1, 152. Account number 2, 143. Account number 3, 114. Okay? Account number 1, 9,000 first week. That's 6.1%. Account number 2, 2,600. That's 1.82%. Account number 3, 4,839. That's 4.2%. Okay, that's just the first week. Remember I said I share 3 accounts publicly? Week number 2. Week number 2, January 6th to January 10th this year. 3,700, 2.33. 2,500, 1.7. 2,200, 1.8. Week number 3. Oops. Week number 3, January 13th to January 17th. 7,900, 4.8%. 5,400, 3.65%. 2,200, 1.89. Sorry, 1.87. They're all there. You just click on any one of these. Okay? There's all the trades. Here's the timestamp. Okay? Here's the strategy. Here's how many contracts. Here's the stocks. Macy's, Kohl's, Riley, MPW, Intel, Kohl's, Intel, Macy's, Harley Davidson, Macy's, Intel, Macy's, U.S. Steel, Harley Davidson. Okay, here's how many contracts. Here's the profits. Here's the profits right there. Add them up yourself. They're all there. I have 7 accounts. 7 accounts. I share 3 of them publicly. I don't hide anything. So 1% a week, okay, $100,000, 1% is $1,000 a week. 10 or 15 minutes a day. It's a strategy created for a 9-year-old. Simple, safe, predictable, consistent. No way for her to lose. When I say no way for her to lose, I'm talking about my daughter. Okay? For her, it was nothing but pre-qualified dividend stocks. Ooh. Oh, that's so much better. Now, when I say no way to lose, think of it this way. I was born in the 60s, raised in the 70s and 80s. Okay? Basically, growing up, Coca-Cola has always been there. Goodyear, Hess, IBM, AT&T, Ma Bell. No, Ma Bell's not around anymore. Home Depot, Lowe's, Johnson & Johnson, Procter & Gamble, Clorox. I can rattle off a whole bunch of companies that have been there since I was born, that I've actually seen all my life. You drive down the road. Judy, how are you today? Thank you for that, Judy. When I say no way to lose, to me, that means a company such as Coca-Cola, they've been in business for over 100 years. I'm pretty sure, okay, there's no way to know 100% for sure, but I'm pretty sure that when I am done and gone 20, 30 years from now, they'll still be making Coca-Cola. I could be right, I could be wrong. Okay? Maybe. It's past 11 o'clock. I'm going to breeze through these as quickly as I can. Big Ray, do me a huge favor. Yeah, I understand the dividend's over 1%. $1 per share. I get that part. If you could evaluate this one, I would be so grateful for you. Now, Big Ray, you're not going to be happy about this, Big Ray. I can almost guarantee you ain't going to be happy, because I'm going to call you a freaking bonehead. Don't take it personally, but I am. I'm going to call you a freaking bonehead. The reason why, MSTY. All right, here we go, Big Ray. You ready? Yield Max MSTR Option Income Strategy ETF. There it is. MSTY. Are you ready? Dividends only. Every single dividend in MSTY has paid out for the last 20 years, the last 2 decades. Hold on a second. The very first dividend was 2024. This thing ain't even 2 years old, brother. What the hell are you investing in a company that's not even 2 years old? And you think the dividends are good? Hold on. Are you ready? Very first dividend, $4.12. $4.12. The very first dividend. The second dividend, $2.54. Now, answer me this. Is that going up in profitability, or is that going down in profitability? The very first dividend is $4. The second dividend is $2.50. That's going backwards, brother. That's down. Hold on. It gets worse. It really does. So it goes from 4 to 250 to 3 to 230, that's down. 190, that's down. 185, that's down. Back up to 419, 440, 3, that's down. 227, that's down. This is like the two-step. 1 step forward, 2 steps back. 2 steps forward, 3 steps back. What the hell are you thinking? The company's only 2 years old. Okay, you put 40, 50, 60 hours in every single week of your hard-earned money, and you're giving it to someone who's not consistently profitable. 4, 2, 3, 2, 1.9, 1.8, 4, 4.4, 3.0, 2.2. I'm going to call it a night. All right, so tomorrow I'm heading to Chicago. So it's not going to be the same setup tomorrow night. Okay, so I won't be broadcasting an all 9 tomorrow night. Okay, I will be back Sunday night, but I will be doing tomorrow night, the next night, and so on and so forth. But I will be somewhere else, so the setup tomorrow night will be a little bit different. I'm going to apologize for everyone I didn't get to tonight. Let's see if we can go over some really quick. Big Ray, I feel bad for you, whoever talked you into buying MSTY. They apparently sold you something and you bought it and you didn't realize what you were buying. That's what I like to think. Because if you actually looked at the numbers and see how profitable this company is, I would like to think you wouldn't put your hard-earned money into it. Yeah, the dividends are nice, but where's that money coming from? Because it's not coming from their profits, as you can clearly see. Big Ray. Wandy brother, how are you today? Sammy, how you doing? Implicity, good evening. Cydia Jabi, what's going on? Midwest, can I start with $500 and still be worthwhile? I'm going to be honest with you, Midwest. Okay, if you're going to start with $500, more than likely you're going to have a different strategy, which dividend capturing 2.0. Now, dividend capturing, you're just going after the dividends. Grab the dividends, get out, run, go to the next company. Now, if you're going to do it that way, my suggestion would be, sorry. I'm not used to talking so much. Dividend capturing 2.0, grab the dividend, jump out, grab the dividend, jump out. What is it called? Fractional shares. You want to find a website or a trading platform such as Robinhood. I don't know if Acorn, Webull, or those other ones do fractional shares. Okay, so you can buy, you know, your $500, so it's 100 here, 100 here, 100 here, 100 there. Okay, and once they collect the dividend, grab the dividend, go on to the next one. Grab the dividend, because there's a lot of videos showing you how to do dividend capturing. There's a certain way of doing it. Stocks have a tendency to move up just before the dividend. So when you see a dividend calendar, you know all these companies are getting ready to pay a dividend. Now, just before the dividend, let's say Campbell Soup. You know who Campbell Soup is. They've been around for over 100 years. Campbell Soup, if you want to get the dividend on Campbell Soup, you want to buy it before this date. Okay, 2 weeks before on a Monday, more or less. When she goes up equal to that dividend or more, you take that dividend, you jump out, and then jump into the next one. I'm not telling you what to do. I'm just telling you what dividend capturing 2.0 is. You find out what the dividend here is, RG Gold. Okay, if you like RG Gold. Or what is this one? Globe Life, Bristol Myers Squibb. If you like those companies, fine. Here's the dividend date. Stocks have a tendency to increase in value just before the dividend date. Don't be greedy. Grab your 1 or 2%, get the hell out, move on to the next one. As you can plainly see, it was closed here. 74 here, over 20, 57, 18, 12, another 18 to 20, 18, 20, 49, 106, 41, 12, 10, 15, so on and so forth, so on and so forth. Each one of these companies on here represents an EX dividend date when they're paying their dividend. Go for the dividend or the equivalents. Grab it, get the hell out, move on to the next one. Dividend capturing. Look it up. It's not that difficult. You buy the stock before the EX date. Okay, as soon as the stock moves up to the equal amount of the dividend or higher, jump the hell out, move on to the next one. Okay, so the first week here, you have all these stocks to look at, all these. Okay, you buy one, collect the dividend. Buy one, collect the dividend. Buy one, collect the dividend. It's called dividend capturing. It's going to be slower because the lower amount you start out with. See, what is 1% of $500? It's $5. That's it. So $5 a week would be your target. So 100 here, 100 there, 100 there, 100 there. So 5 positions, 100, 100, 100. Okay, you're only looking for 5 cents for each one. Well, that's like $5 for the week. Anyway, next. It isn't a company. FH, I have no idea what you're talking about, but okay. Olivia, good evening. David, what's going on? VDY, check me out tomorrow. Dahlia, we looked at Intel, UPS. Not today. Not for Misty. Dahlia, no. YMAG, ULTY, YMAG, VST, blah, blah, blah. Mekmu, good evening. Anthony, man, what's going on? Yulin, good evening. Simone, what's going on? Game Dev, what's going on, Game Dev? Okay, let me rattle through these. Holy cow, we're past 11. I just want to get through these. All right. Mary June, hey. ADM, advanced. Wait a minute. ADM, advanced. No, wait a minute. Archer Daniel Midland. Okay. Thank you there, Mary June. Santi, good evening, Santi. Tyler. Brad, okay, but what happens when the stock falls when you were hoping it would go up with options? Brad, you got to come up with an interesting question because everybody asks that question all the time. Stocks do 2 things. It's a 50-50 shot. What do you do if the stock goes up? Okay, what if the stock goes down? It's a 50-50 shot. Give me a better question. Seriously. Pickle Rick. Okay, Pickle Rick, how are you today? Frank J, how you doing? Scott, Sammy Ron, what's going on? Patrick with a K, cool. How long do you have to hold the stock to qualify for the dividend? 2 days. All things Rakita, good evening. You have to have the stock by the EX dividend date. Yes, that's what it's called. Okay. I keep watching him, but I can't get what he's saying. He got me wanting 1% a week. What's wrong with 1% a week? Okay, keep coming back. Keep asking questions. I'm sorry that it took me so long to get to you because, I got 9 different channels and I can't, concentrate on one channel all the time. Tyler Durden. Ooh, Tyler Durden. All things Rakita, basically selling covered calls to generate weekly income. Thank you, Tyler. Okay, Andrew, thank you for that. As if not, we didn't know that already. Are you trading in a taxable account? Hell no. I canceled my subscription to those people a long time ago. What was the CEO assessment? Okay, Frank J, you're going to have to be a little bit more explicit or a little bit more details of what you're talking about. Holy cow. Lift. Uh-oh. Missed a bunch of questions. Chipotle. Was that Alex? How you doing, Alex? Marcy. Good evening, Marcy. Crooked Page Publishing. Crooked Pages. Now, don't get me wrong, but if I'm going to be publishing a book, Crooked Pages really not an ideal name. In my humble opinion. What the hell do I know? Mike Sweeney, what stock was that before Dollar General? Oh, I don't remember. Tyler, thank you for that. Dun 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 dun. Tyler. Mike Sweeney, right? Listen to the live as I work, so sometimes I miss the stock name. All right, Mike. Sorry about that. Mike, it is recorded, so you can go back and look at it again. Wells Fargo, thank you for that. Vale, good evening. Cuba, Andy. 301 Connor, hoping the best for everyone with these rate cuts. Okay. You've been investing longer than I've been alive. Thank you. I'm not quite sure how to take that one, but at some point, when you're 61, there'll be people saying, hey, you've been trading longer than I've been alive. Same thing. Philip, Dwight, Spencer, Zader 711. What now? Ooh, ABV, ABBV. Ooh, check me out tomorrow. Rebel Rooster, SPX, no. Philip, I've been moderately buying Lucid. What's your thoughts? Ask me tomorrow. Bro, what are you even doing here? Okay, it's an interesting question. Right now, I'm sitting. Thank you for asking. So what? All right. Heisenberg, Rabbi Alfred Chowda. Okay. Thank you, Rebel. Bro, this is trash. I will trade circles around you. Okay, you have fun with that. Uh-oh. What's the RSI MACD? What's the strength look like? What are the targets? Good entry. I'm going to say good entry, but, you know, hey, anyone here, please stop wasting your time. Bro, nonsense with no support. Oh, cool beans. All right. Learn trading before you live stream to people. Awesome. I love negative people. I really do. You haven't said one thing yet. What are you talking about? Great job, blah, blah, blah. Learn trading before you start picking people, blah, blah, blah. 23, get out. Marine, blah, blah, blah. No, nothing better to do. Close, huh? Okay, Ishmael. This is a pre-recorded. Okay. There's always, somebody always says it. Every night somebody thinks this is a pre-recording. Not even an actual account. Okay, thank you. Hobby Lobby hasn't been around long enough. Dr. Dev, I made that comment because you've got sidetracked with distractions. I always get sidetracked. Tuck, Tesla having a good run? Yes, it is. Thank you there, Tuck. Stephen Ashmore, Altria. We already looked at Altria. Ooh, Kimberly Clark. That's a nice one. Kane Adams, Jalenta. I like the way you teach. Thank you. AbbVie, Zeta. We'll take a look at AbbVie tomorrow. ACN. We'll take a look at that one tomorrow. No name. Do you got a Discord community? Yes, I do. Do you got a Discord community? Yes, I do. We already said that one. Love the energy. Thank you. Thoughts on Kimberly Clark? Love Kimberly Clark. Ian, what are your monthly profits on average? Oh, my God. 1.4 times 4, that would be 6.2. That right? 1.4 per week on average. That would be 6.2 per week and per month. Sir, can we look at the ticker NVO? Drizzle, we'll have to take a look at it tomorrow, way past 11 o'clock. I made 400 after watching you for 2 months. Awesome, Drizzle. Hope you keep on doing it. Keep coming back. I'm here every night. Ooh, we're at the end. Connor, do you practice algorithmic trading? No. Okay. Now, Connor, I'm not quite sure. Okay, Chris, hold on a second. Connor, do I practice algorithmic trading? Now, Connor, when I say I created this trading strategy for my 9-year-old, so I'm thinking to myself, I know there's no way of going back in history, you know, no time travel, but ask you, when you were 9-year-old, did you understand algorithmic trading? And if you didn't, how would you teach that to a 9-year-old? So for my 9-year-old, simple, safe, predictable, consistent, and no way for her to lose. The 5 rules were simple. If it's not on the list, no. Number 2, never sell at a loss. Number 3, make sure the company's consistently profitable. Number 4, weekly options only. And number 5, make sure the numbers work. It is a 10-minute strategy. That's where we came up with the 10-minute trader name. Because she was 9 years old and she wanted to learn. Okay, what 9-year-old little girl wants to learn how to trade stocks? Most of them want to do ballet or gymnastics. No, my daughter wanted to learn to trade stocks. The boys, not interested at all. Okay, Chris Folty, question. Okay, well, ask the question and I'll get to it. Okay, because we're done over here. Let's finish up. Holy shit, 78 questions. Holy cow. Winner, 86. What's going on? Game Dev HQ, in the money covered calls. Absolutely, why not? It's all relative. I'm going to agree with you, Adam. Roper, I like that one. We'll take a look at it tomorrow. 670. I'm not quite sure what 670 means. Walmart, we already looked at it. Roper, we'll have to take a look at tomorrow. PYXS. No idea what that means, but okay. Let's keep on keeping on. PYXS, okay, again. Chad Sarton, hope you're switched to Web 3. You will regret not being involved now. It's easier to get involved. Okay, Chad, I'll tell you what. I'll take your word for it. Send me some information in the DM. I'll take a look at it. I do look at all my what do you call those? All my DMs on TikTok. I'm on TikTok 3-4 times a day. It's amazing. Combo Crusader, thank you. B. Henry, what's going on? Dahlia, Mickey D's, 1.2%. Gotta love it. Missouri. Oh, Missouri, okay. Good evening. Natalie, good evening. Oh, that's so sweet, Natalie. Delia, that's a lot for Mickey D's 30,000. Well, 1.2% is 1.2%, no matter how you look at it. Okay, see, a lot of people take money and they throw it into a CD and they tie it up for a year or two for 1% for the year. So 30,000 for 1 week to get 1.2% depends. Do you like McDonald's? And then, do you like McDonald's at that current price? So everything is relative. So if you have millions upon millions of dollars, 30,000 is not a lot. But if you have 25,000, then 30,000 is a lot. So you might not want to do Mickey D's. You might want to stick to a stock that's less than that. Remember, there's over 10,700 different companies. But that's a lot to choose from. All right, Chris Foti, I'm waiting for your question, brother. Okay, I'm waiting for it. You said you got a question. Let's have it. Combo Crusader, PYXS. Okay, we already looked at that once, couldn't find it. Brentwood, look at Gush Oil, ticker Gush. Brentwood, I've never heard of that. Gush, G-U-S-H. Hell no. How's that? You want to take a look at Gush? It's a monthly optional stock. I don't do monthlies. You weren't listening. Weekly options only. Monthlies just don't work for me. I don't want to get a check once a month. I want to get a check every week. Okay, Brentwood? Braden, how you doing today? Natalie, J Imposter. Okay, Love Chad, TSLY. We already looked at it. It was a no. Chris Foyle, about time. Took you a while to get to that. Looks like it got deleted. My question was, I saw your account. You sold Riot. Riot doesn't pay dividends. Yeah, I'm well aware of that. Okay? When I have a client that says, hey, buy me some Riot, I go buy some Riot. And if it looks good, I'll do it too. Every once in a while, you know, I do go off the charts once in a while. Okay? Look at it this way. Apple was not on my list either. Okay? I didn't do Apple, but Warren Buffett did. Now, Warren Buffett may have done Riot. That could have been why I did it. Because there are traders that I do admire, and I do look over their shoulders and see what they're doing. And if something makes sense, now if Warren Buffett bought Riot, and I'm thinking to myself, okay, well, if he bought it, why can't I buy it? So you're right. Okay. Brentwood, that is only a monthly optional. Thank you, Mr. Burner. Alex, wonder what your thoughts on Chipotle. Now, don't get me wrong, Chipotle doesn't have dividends, but every once in a while, everything just lines up. So I think I did Chipotle twice this year because everything just looked perfect. I think they were offering like 6% for 1 week. So it's like Saturn, Pluto, and Uranus were all lined up and everything just looked wonderful. So yeah, normally I don't. Cisco 1.45, STK 68. Okay. Texas Shack, how you doing? Turbo Trades, good evening. Sneaky Clean Sask, good evening. Lady the King. Oh, Vady the King. All right. Kilroy, what are your top 3 stocks to buy for covered calls, even if you don't buy them every week? Oh, that would be Macy's, Walgreens, Kohl's. Dying to learn how to do this so I can quit my job and do this for a living. Oh, cool beans. Well, Chris, you're relatively new here. I'm good with names, so I would remember that name. But I haven't seen you before. Santi, good evening. Thank you there, Mr. Santi. I'm just about, holy cow, I get 84 questions. It's like, didn't I just answer a bunch of these? Uh-oh. DD, what's going on? Alvin, is Chipotle good? Depends on what you're looking at. 86, thank you. I'm new. What system are you running? Miss Lucy, it's not a system. It's called Think or Swim, and it's offered through Charles Schwab. Thank you there, Mr. Chris. Been watching for a week or 2 now. Okay, well, keep coming back. I'm here. Open Door Technologies. Okay, I write pretty. Okay. Ask me tomorrow. Alex, personally, I think it'll rebound. Okay, you'll be patient. Yeah. No dividends. Okay. Travis, good evening. Miss Lucy, thank you for that. 86. This stream gives me hope in these uncertain economic times. Sean, good evening there, Mr. Sean. How you doing today? First time here. I remember that name, the way, especially the way you spell it. Thank you, Chris. Starting to grasp your concept, but needing more cash to be able to attain 100 shares of stocks. Chris, take a look at dividend capturing. Use the strategy along with the dividend calendar. Because the dividend calendar will tell you when the stock is getting ready to pay out a dividend. And then you take a look at all the charts. Is it making the move at the time I want it to? Jump in, grab the dividend, jump out. It's going to be a slow process when you start out with a small amount. I started out with 12,000 back in the 90s. It took me decades to get to where I am. But then again, 60 is coming whether you like it or not. So if you start now in very small steps, because at first it's going to drive you nuts and it's going to seem like you're getting nowhere. Then at some point, it's like a snowball. When you roll a snowball down the hill, it starts out small and all of a sudden it gets bigger, 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 bigger. It's the exact same thing. So 1% on a $10,000 account is only $100. But $100 every single week, that's $5,200. Kilroy is buying leaps 2 weeks after the quad witching an actual strategy. I know this is not your strategy. No, it's not my strategy. I don't buy options. 80% of all options expire worthless. Any reason for having 7 accounts? Yep, I don't trust the government. I don't. All right, let's keep on going. Yeah. Dividend, AA, it's Alcoa. Okay, we've already looked at that one tonight. 86, I'm thinking it will rebound. I know they're experiencing some slowdown on growth. Alex, always happens. Stocks go up, stocks go down. If you like a company, just follow it. You don't have to trade every single day. When everything's lined up, if you like a company, if it's at the bottom, getting ready to turn around, go back up, that's the best time to buy. Buy low, sell high. Okay? Slowly, please. I don't understand. Oh, I'm sorry about that. I'm getting ready to leave for the night because I've been here since 8:30, and we're way past my bedtime. Menzie, what's going on? Hoax. You need to buy this. Do you know what leaps are? I can't believe you're even asking me that question. Yes, I do. Do you ever do leaps? No, I don't. See, I don't buy options anymore. Now, I used to many years ago. Have a good night. Appreciate what you do. Thank you, Chris. I used to buy options years ago, but I don't buy them anymore because 80% of all options expire worthless. So if you're buying an option, you have a 20% chance of being right, an 80% chance of being wrong. So if I sell an option, I have an 80% chance of being right and a 20% chance of being wrong. I like to take all the factors and have them in my favor, odds and probabilities. Looking at Grab Leap's $7 call. Okay, yeah, I get that. Okay, so you need to buy this. Come check with me tomorrow night. We'll take a better look at what it is you want to do. And I will show you, in my opinion, why that's not a good idea. There are other strategies that you could, if you like Grab, you could still use that and make a better rate of return. Okay? Kilroy, I don't think that's how those odds work, though. Okay. I'm not going to argue with you, but if facts are facts, 80% of all options expire worthless. That's a fact. That would mean only 20% of them are actually profitable, because 80 and 20 equals 100. Okay, so if 80% expire worthless, only 20% actually make money. That's how facts work. Options get sold far out of the money. I buy them and sell, then they expire worthless. Okay, but did you hear what you just said? You buy and then you sell and then they expire worthless. Yeah, eventually they always expire worthless, most of them. So depending on what your strategy is, you're buying far out of the money. Awesome, nothing wrong with that at all. When they go up, you sell, you make a profit, great. But after that, they expire worthless. So it all depends on what your strategy is. I don't buy options because I know they... Okay, I'm not even going to get into that one. Let's keep on going. AS, what's going on? Faria, good evening. Zaki Mahmood, good evening. You need to buy this. Realty income, hell no. I don't do monthlies. Realty income, it may be a great company, it really might, but it is a monthly optionable stock, and I don't do monthlies. The numbers just don't work. Thank you, Kilroy. I appreciate that. Drum time, what's going on? Abduli, how are you? Gen Z Koenig, how you doing, Gen Z Koenig? Metal Face, James, what website are you using for that information? Okay, Metal Face, this is not a website. This is Thinkorswim. It's a trading platform. The website I do use is FinViz, Financial Visualizations, finviz.com. That's one. Then I use Yahoo Finance. They're both free to use. Okay, let's keep on going. Sharperlative. What does the 10-minute trader consist of typically? Should I just go? Uh-oh. Uh-oh. It just moved. Uh-oh. Where are we? Okay, here we are. Okay. What does the 10-minute trader, 10 minutes, consist of typically? Should I just go to the website? Okay, the 10 minutes consists of, okay, if you take a look at your account, let's pull one up. Okay, 5 positions. See it? 5 positions. Okay, first thing I want to do is get my glasses so I can see the damn thing. First thing I want to do, take a look at the chart. Okay, what did I buy it for? 15.17. That's way the hell down here. What's it at now? 17.80, right up there. What did I sell against it? The 25s? No, that's not it. The 15s. Okay, so I bought it 15.17. See, look, the numbers aren't that difficult to read. Okay, what did I buy it? 15.17, right about here. What's it at now? 17.82. What did I sell? The 15s. What are they at now? Okay, what should I do next? It's not that difficult. And then I go to the next one. What did I buy it for? What's it at now? Where's it going? What did I sell? Am I at a loss? Am I at a profit? Do I keep it for another week or do I get rid of it? It's all a numbers game. Okay, what did I buy? Where's it at now? Wait a minute. What did I buy? What did I sell against it? Where's it at now? What does that mean? Where's it going? What should I do? It takes less than 30 seconds for me to take a look at that. What did I buy? 15.17. What did I sell? The 15s. What's it at now? 17.80. Well, I'm in a profit. Let it go. That's it. What did I buy it for? 15.17. Okay, let's do it again. Mara, what did I buy it for? 15.17. What did I sell? The 15s. What's it at now? 17.34. It's up from where I bought it. It's at a profit. Thank you kindly. Let's go on to the next one. Stop making it more complicated than it needs to be. Make money, move on. All right, I'm out of here. It's 11:30. You guys have a great day. And we'll do this all again tomorrow. Do you ever trade leverage funds? Absolutely. Always. Why not? I've been doing this for over 30 years. I have no problem whatsoever doing leverage funds. But with leverage funds, I always leave a nice big cushion in case things go backwards. That way a leverage fund doesn't come and kick me in the butt. Santi's Caps. So you buy Monday and sell it on Friday. Something like that. Pretty much close. Have a great night, you two. Although I don't quite understand, I feel that you are very professional. Thank you very much, Leon. Come back every night until you understand it. Never, ever, ever listen to some bonehead online. That's me. I'm the bonehead. Greetings. Do your own research. Does it make sense? Is it something I can do? Do I like this company? Don't take unnecessary risks. Open up a paper trading account first. It's like Monopoly. 4 greenhouses, 1 red hotel. Go around, collect $200. Round and round and round we go. Where we stop, nobody knows. Take your time. Don't be in a hurry. The stock market's been around since 1602. It ain't going anywhere. It'll be here long after I'm gone. D9, how you doing? Kilroy, I played Dell with you. It's back up, and I've sold calls the whole way. Awesome, Kilroy. Way to go. Okay, I'd like to know how you're doing, though. When did you start? How consistently profitable were you? What are you up? What are you down? Just let me know. I'm kind of curious. Or drop your number. I'll give you a buzz. We can chat. Von Gray. I paid dividends. I get paid dividends, but it's always like $50. 50 cents, 75 cents. And I'm like, it's not going to add up anytime. Okay, see, Von Gray, send me your number. I'll give you a buzz. I'll walk you through a different set of thinking. Okay, you're looking for the dividends. I'm not looking for the dividends. I'm looking for the premium. The premium comes every single week. The dividend comes once every 90 days. Okay, AVGO, we'll take a look at it tomorrow. Thank you very much. You're welcome. Good enough. Good stuff tonight, Jim. 86. Woohoo! Scorpio! New here. Hoax. He's a professional like him. Thank you very much, Hoax. Not a professional, though. Just the right amount. I ain't nothing. Game dev, 50% a year is the norm in the money covered calls, baby. Yeah, absolutely. What's wrong with that? Mike Sweeney, how you doing? Modi, how are you doing? UPS. Jess, oh boy, it's dividend stock talk o'clock. Actually, it's over. B. Henry, hey, I love the show. Thank you, thank you, thank you. Is that a smart board? Yeah, floral it is. Do you know how to use it? I have no clue. I know how to do this. That's all I know how to do. It's a smart board, but I have no clue how to use it. I've seen someone use one online. It's like, oh, cool, I got to get me one of those. Well, got one. How do I use it? Do you need a whole share for a dividend? Yes, you do. DG. Ooh, Eric, we looked at Dollar General earlier today, and I don't remember what the outcome was. Jess, how you doing? Calvin, how you doing? Okay, thank you. Mudasir, good evening. Sharif, good evening. Poor man's covered call. I like to know how you manage gamma risk with selling weekly options. Oh, wow, dude. Now, from what you say, what you're saying now and what you said earlier, you're definitely in the wrong game, brother. You really are. Okay? The conversation that you're using, the terminology you're using, this is a simple, predictable, safe strategy, and you want to make it more complicated. Okay? It's not that difficult. Okay? You take a look at the chart. Here's the high, here's the low, here's where it was, here's where it is. It went up, it went down, it went up, it went down. Now it's going back up again. Okay, the gamma, the theta, the rho, and the delta is not going to tell you jack shit, diddly squat, nothing. It went up, it went down, it went up, it went down. Now it's going back up again. That is simplicity. Don't try to make it more complicated than it needs to be. You want to talk about the gamma, the theta, the rho, the delta, all that crap? Well, great. Well, why not? Let's talk about the Black-Scholes pricing methodology about standardized options. And then we can get into the Fibonacci movements. And then we can get into the RSI index. And then we can get into the MACD and then the 30-day moving average as opposed to the 50-day moving average. And hey, let's throw in the 20 also. We can get as complicated as you like. You can. I have no desire to do that whatsoever. I want to take the 9-year-old approach. Simple, safe, predictable, consistent, no way to lose. If I do it right and I don't make stupid mistakes. Number 1, never pick a stock you don't want to buy. You don't want to hold on to. Number 2, never sell at a loss. Number 3, make sure the company's consistently profitable. It doesn't make any sense otherwise. Number 4, weekly options only. And number 5, make sure the number's right. Okay, what am I buying it for? What am I selling? What am I collecting? Is it 1% or more? Great, let me do it. That's it. Why do you want to make it more complicated? That's a you thing, brother. I like simplicity. I like predictability. I love the Lee family. Simplicity, predictability, profitability, safety, and a whole bunch of more. Okay, so I got a couple more questions and I'm done. Texas Shack, how you doing? Chukia, I don't know. What do you suggest as a strong dividend stock? Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and then take a look at Warren Buffett's list. Rate cuts. I'm out of my drink and my throat's getting sore. Edwin, rate cuts. Don't even pay attention to them. Tin, how you doing? Rashawn, oh, I'm done. That's it. Jess, can't forget the Bollinger Band. She's absolutely right. Let's throw in the Bollinger Bands too. Why the hell not? Do you have any idea? Let's take a look at this. Let's get rid of this. Let's put the chart up right there. Let's go studies. Let's go quick study. Take a look at this. Who said this one? Put my glasses on. Let's take a look at all the crap we can put in. Market strength studies, momentum studies, moving averages, portfolio studies, profiles, simpler trading studies, source codes, stocks, commodities, magazines, blah, blah, blah. What's all this? John Peterson indicators, John Elder's studies. That's those. Add a study. Add a study. It's this one. Okay, here's some more. Market strength, momentum, moving averages, portfolios, simpler trading strategies, trends, upper studies. Look at them all. There's a whole bunch of stuff, a whole bunch of crap we can throw in there. You have fun with that. I like simple, safe, predictable, consistent, no way to lose. 5-10 minutes, I'm done. That's it. 5 or 10 minutes, I'm done. You want to get more complicated? You be my guest. Just leave me out of it. What's your favorite book of all times? That'd be the Bible. Did you buy Monday and sell everything on Friday? I like to, but not always. Doesn't always work that way. Okay, so we're basically done. You guys have a great night, and we'll see some of you guys again tomorrow. Yep, nope. End. Done. End meeting. All right, you guys have a great night over here on YouTube. YouTube number 3. There we go. That one's done. Done. And over here on X, that one's done. Okay. TikTok, good night. Good night. Sleep tight. And pleasant dreams to you with the wish and prayer that all your dreams come true from now until we meet again. Ooh, that's horrible. Kira, what's your favorite book of all time, General? I'm just leaving, General. Just finished up, brother. A little late to the party. Adios. Au revoir. Auf Wiedersehen.